It is December 11th, 2025. The month and year is about to end, but yesterday we got a pleasant surprise from Powell. I'm sure you heard everybody, hawkish cut, hawkish cut. We all thought it was going to be very hawkish, but then your boy Jerome Powell came in and was surprisingly dovish. I mean, he was really honest about the tariff impact. He even said they're going to find a better deal of info by March and April, but even then, he said they'll make sure it doesn't happen. The big surpriser out of all of it, beyond just the amount of cuts, I mean, he did leave January on the table, but the real big thing was that they started buying bonds again. So we had a nice little talk yesterday before everything. We were talking deflation, all these other things. I think the bonds and that bond market is going to come into play as well. You got another day of silver going crazy. Right at 6 o'clock, we heard of Disney investing into OpenAI. They got some warrants and all of that. So you're going to have a little bit. The only bad part is Oracle. So the Russell is up, I believe, still. But Oracle, that one's going to be adding a little bit of stickiness. We got a couple more earnings after the bell today, but generally the market is feeling a lot better considering Powell did not bring the hammer, and they are more worried about employment than not. And then you got some employment data that is kind of all in line with all of everything that we've been dealing with. So no big changes just yet, and that's kind of what Powell hinted at yesterday too. But Chatadonia, I hope you're ready for it. I hope you're locked and loaded. But before we do anything, before we chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has made a sacrifice that most of us never have and ever will. And I'm talking about the veterans of the United States of America. So on behalf of the people here, the people not here, want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this nation, even your families, for real. God bless you and thank every single one of you. I hope everybody who hasn't served can make some noise also, but it's something we should value. It's something we should appreciate. And if you could learn to do that in the things that matters, imagine how that plays to the financial market value, appreciation. I hope you feel me. And for real, some of y'all have been trained, bro. And the discipline and knowing about the long-term goals, all of that, baby, it applies very well to what we're doing here. So I hope you guys, if anybody should be owning the assets, it should be you, the land, baby. Get it started and get it going and stay on the path. But at the very least, God bless every single one of you and thank you. And big shout out to everybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, everybody making their communities run, baby. God bless you and thank you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Set the digits! Oh, it's game time, baby. Or nah. We wish you a merry long term. We wish you a merry long term. We wish you a merry long term. In a 25 basis cut, they are buying bonds because liquidity's low. The market don't. Okay, I'm sorry. We could. Oh, Chad. Friday, Junior. It's gonna be a good day. It's going to be a great day. And yeah, we got to talk a little bit. We're going to talk bonds. We could talk curve steepeners. I would keep an eye on the bonds too. They looked a little bit different, but then now they started getting going, and then a couple of things broke out. Literally, Oracle is just going to be your whole bad news thing in terms of the... try to mix both of them. Yeah, IWM was up earlier, so that's the only one that is broken out so far. We got about 50 seconds. I have a couple of plays. Watch Shermal, Orbs, CRBP, XBI, BCRX, Pinduoduo, and IWM. Did you hear Pinduoduo? They literally got into a fist fight. So Pinduoduo had like regulators go to their office, and apparently they got into a fist fight with Chinese regulators. I know. You got to refresh if you're on DVR. It should have been turned off, but you never know, homie. Might need a long term, homie. Yeah, Oracle, I think $40 will be the two standards, give or take. So we're going to see, and then Broadcom, Lululemon, and one more report after the bell here. So we'll see how that all factors in. But good morning. I don't think there is a video of the fight. No. I could be bad though. Like seriously, just again the Chinese culture, the whole respect, saving face. I mean, it's not. I don't think I've ever heard of that. Round 1, fight. So yeah, we'll see that. It honestly could lead to something, which could get interesting. There's a couple of financial plays that got upgraded as well. We'll see how those play. Yeah, IWM too. So that IWM was actually green in the morning, but that already flipped. And then just see whenever the Oracle drama stops. That could be a continuation as well. I hope you guys see why I was clamoring about making any. If you had anything that was dead yesterday or down, the premiums were odd. So I'm glad. I mean, pretty much the losses on anything you held would have been like 5-10% if you did those contract sells. It was kind of nuts. TTD hit a 52-week low. And then Netflix went up, even though they were talking about raising the bid. So yeah, we'll see if that one ends up holding. And then again, there is a couple of these biotechs. Which one is it? CRBP. And then watch Eli Lilly too. They had a pretty big trial. And then silver's up, gold is down. Yeah, silver's the one going crazy. Actually, gold went up here to start. Nasdaq's down 3/4. That's a rackle. Russell's only up by 0.2, and Dow is the leader. And then SPY is even down by 0.4 as well too. Good morning. All right, well, gold, that's weird. GLD's down, but gold futures are actually doing a lot better. Broadcom. 2 standards on Oracle up 300 for next week. So those hit a decent amount then. That's good to know. So that means, again, on the continuation, you could use that as a place marker and see how they continue. Oh, where's the other one? Okay, Wayfair, yeah. IWM starting to wake up. So that's the one. That's the only one that's broken out of Chop City. For real, man. That's the one I would be looking at. That's the one we were talking about yesterday, and then pretty much anything long duration. All right, so Oracle, it's either going to flush through to the 2 standards or it's going to do the little pin. That's what I'm saying. You could watch those as a place marker and get a better idea there. But yeah, they've even jacked up all the out of the monies. And then again, you're doing it correctly by looking to next week. Okay, we'll give that one a second. Still going. Adabe too. Adabe didn't do bad. So watch. Adabe has a little bit of room there as well. Honestly, Adabe might be a decent one. Because again, considering their value and how they've played out, Adabe watched both sides. And some of you pronounce it Adobe. So I know. Just in case, we want to make sure we include everybody. Tesla, Microsoft. Warby went up, what, 20% yesterday? That shit's still up 3. So yeah, that one's still continuing too. That was from the Google shit. And then watch the banks as well. You got JP Morgan starting off. And then silver, dude. So again, what was it? There was a note on silver today. They were saying that even if silver goes down now, they're saying it's not going to change direction, but they're also saying that this type of move is unsustainable. So they're saying it's going to pretty much come down but not change direction. But yeah, people are getting baffled by the silver move. They are blaming the tight supplies, but as we heard the other day, there's too many things going on. And then where's Meta? They started off low. And again, Disney had the OpenAI thing. They're starting to run up there. I think it's above the pre-market level. Yeah, watch if Disney gets above that candle. Because again, people are going to wake up still and get that headline. Oof. Those premiums are disgusting already. So yeah, big spread. Why the fuck why is Disney going? Disney went up more than fucking Oracle. Those are literally up 200-300%. So watch, like I'm saying there, you're at 2 standard deviations on Oracle. It's either going to bounce from there or it's going to, find a home. Intel, there was that Liputan news. They're below 40 now. And then Dollar Tree. I haven't really looked at Staples. And then they replaced the CEO of MO. He stepped down, I believe. Not for like unnatural reasons. I think his time was up or he's getting old. And they put somebody else in, or they announced the plans for that. BWXT, Delta hitting a 52-week high, and then oil was down today. Yeah, oil's still down 2.7. I know there's a European meeting with like for the war, Ukraine and all that, but I don't know why it's like that. We had some oil data, but then again, that's more bullish to what you saw with yesterday with Powell. So again, Powell was a big surprise, you guys, if you're not aware, and kind of everything he did was it was surprising. You remember we were all talking about the hawkish cut, but the way they came out, the way he talked about the economy moving forward, again, it seems like the Fed's focus, the bar that they're focused on is the, is the employment, which is kind of crazy considering everybody was clamoring about the inflation all year. There's Baba on the low now. I remember they had that 4% move yesterday. I want information. I don't want opinions, brother. You could go to the trading chat if that's the case, but I don't think that's a long-term one. Because, I think some of those old plays are still up a shit ton, surprisingly. But yes, stay locked in or long-term. KRE. Yeah, banks are all killing it. Again, that has been the silent leader there as well. All week, XBI, more long duration. ARC is even... Actually, ARC's down, but they're trying to climb. Appel. They was at the White House yesterday. Yeah, Eli Lilly had the trial stuff, so see, I haven't looked at any other healthcares though. I know XBI up, and then you got two of those drug events coming here. Dude, Disney was insane. I'm telling you, those options they went up like 300%. I just think because it was kind of surprising how that news hit. Some even went up 400%. Holy shit. Ups above 100. Tesla. Yeah, the AIG news got confirmed, but did you just hear me? My whole option rant. So the AIG confirmed it. There was an informal offer from Chubb, but there's no other details on that. The plays from yesterday are still up though. Google is rolling out built-in Gemini AI on Apple iPhone. Habibi. Stellantis on the low. High ticker starting to pick up in the SPY. I mean, SPY's doing a lot better. Dow's up 0.5. Your boy is following along with the Russell, and then NASDAQ already recovered a quarter, but literally that's just going to be the Oracle effect. But Oracle hit 2 standards and then started bouncing up. Tesla down. Microsoft's in the green. Hi. So yeah, equal weight's going straight up, 0.3. Equal weight's up, SPY's down again. That's going to be that tech effect once again. Good morning. Happy long term. Happy post-Powell day. Happy Powell pivot. A little effort. I can't believe it. Oh, I keep forgetting the biotech. Tomorrow's the 12th. Why did it just disconnect me? Do you guys hear me? Hello? Yeah, it just clapped me for some reason. A beautiful day in the neighborhood. Beautiful day in the neighborhood. Is Oracle an overreaction? I mean, people got what they wanted. The RPOs went up 500%, all that, but it's just that then Oracle, yes, this is an overreaction. But if not, then you could argue this is some prudence, a prudent awareness of the risk. Planet Labs, I don't really look into them too much, but I know they had good earnings today, right? I think it's up 20. But I haven't looked into that one for the long term. I got one. Those are too expensive. Dude, why is it cutting me out? Oh, it keeps cutting out. Now it cut out the other one. Did y'all see that? So it literally cut out the locked in, and then 2 minutes later it cuts out the other stream. Now it just cut me out again. Come on, YouTube. Yeah, no, it clapped the locked in first. Yeah, you might have to restart. Dude, it's doing it again. What the fuck is happening? You hear that? Every time I go, ba-dimp. It's a beautiful day in the long-term HUD. Alright. What's that one? The Thursday effect, yeah. I mean, remember, Thursdays are usually bad. And now it's cutting out. Dude, locked in is still cut out. Yeah, I can't even get filled. Yeah, no, you have to turn it on Fidelity. So every time you buy a new stock on Fidelity, you have to. You're just reminding me. I'm pretty sure I did it last time with Tap. But yeah, I think you have to do it every single time. They're haters. Estee Lauder. All right, I took one of the one of the biotechs that has an event tomorrow. I grabbed a really, really small one. Not a recommendation. Don't you like here? I'll do it here in a second. XLB and XLF running. Dude, my thing is still lagging very hard. I don't know what's up there. Apple's on the low. Oh, tap went up. Yeah, Apple's actually kind of starting to dump. Yeah, Fiserv, again, all the financials, and then the one net kind of related to Fiserv, Shift 4. They got a what's it called? They got an upgrade there today. Damn, bro. So do you guys realize something too? There's something now after yesterday. Yeah, AI, dude, how is AIG still going? Again, the plays held up from yesterday if you were early enough on them. I think they're up even over 100, depending on the spread. Oh, no, they took away the bid. But do you know the, what's it called? There's something that happened. So MLS was already up on the morning. If you're going to call it, make it seem like it's news, please. No, there's not. I think you're getting hyped up from your friend in the chat who has calls probably. Yeah, AIG, there you go. See, that just took a stick. That's $2. That's a pop. But then it came right back down. Meta on the high ticker. And then XPI too. See if the IWM comes up. And then I don't know what's going on with Apple. Apple's going to kind of slow you down here a little bit. KKR. Is it chill, dude? Or is it still fucking up? Now my other shit's lagging. It's a beautiful day in the neighborhood. And then gold and silver. Yeah, AI, dude, that's, remember, it held up. That move yesterday was 7%, and it's up another 4%. So like I'm saying, that news was... It was real, but we don't have any other details. You don't know anything on price. You don't know anything about it. All you know is that Chubbs did a informal approach. XLF's already up over 1. And then SPY coming down. KHC is kind of going vertical. So that just had something. Remember, they don't really move too much. CLBT. All the chips are still down. That's part of the Oracle effect. Some more than others. I feel like we haven't seen NVIDIA in a while. Yeah, again, I think Fiserv is off of the Shift 4 one, but then again, all the financials, I think financials have been killing it all from December. I think they've been straight up. Yeah, Tesla threw a new low. And then the whole SPY, again, I want to say, oh my gosh. Yo, bro, I don't know what's happening. They keep cutting you guys out today. It's cutting out both of my streams. They hate you. Well, XBI, you get sad. Well, do you know why we played it? So do you remember the reasoning behind XBI? So whether you got the gift or not, I think the information is very important. So then that, and it's going to be helpful. That's going to be able to get you a lot of other plays, especially depending on if we get the same trends next year. I would really encourage you to understand it. Yeah, GitHub's down. YouTube's not even showing the down detector though. There's a couple of things, but yeah, bro, they keep fucking with me. It's been a while since we've had this. Since they've cut down every stream for a little bit. You're up on Fiserv? That's nice, man. That's nice. Do you watch often? You guys didn't. Did Powell cut the rates and then y'all just started breaking the rules again? So If y'all can please do your thing, but I encourage you to uphold the highest standard. Okay, you're gonna get Cole here again. But yeah, I'm up 2, man. I'm up 2. That's the idea. So that's what I was gonna say. I think the rate cut got some of y'all crazy, but then there's something that happened that you need to be aware of. I don't know. Maybe is this why TAP is even going up? Something happened. I'm looking here on Fidelity. I need to find out how to do the drip thing. I forgot how to do it, but something happened. I clicked on one of the buttons and I realized it. It's kind of crazy. Something changed yesterday. It's actually kind of wild if you think about it. Do you know what it is? Oh, to enable dividend, go to accounts and trade, account features, brokerage and trading. Yes, dividends and capital gain. Yup. Yeah, he did. That's exactly how you do it. Okay, all of mine are on, I think. Yeah. That's exactly. Thank you, Goni. Do you guys not know? But something happened yesterday. It's big. And it's going to affect everything. I just saw this on accident, but it makes a lot of sense. I'm just being dramatic. But are you ready? Are you ready? So remember, Fidelity pays out really good on cash management. Just keeping your cash in the money market, they pay you really good. Do you guys realize now you're only getting 3.5%? Do you realize how crazy that is? Yeah, the rates are lowered, brother. But why is that crazy, bro? You don't remember? You were getting almost 50% more in yield just a couple months ago. Or even then, you started this year near the 4s, or 4.2. At one point, you were getting what? Weren't we getting 5% on cash? So this is what I'm telling you, man. Even in a weird way, if you're holding a lot of cash now, your cash is starting to pay you less. Yeah, there's a lot more money on the sidelines, but now that money is not getting paid the same. So that's why, I mean, kind of locking in some of these dividends and getting it to work, bro. Yeah, it's important. I had a flare. I don't know. My thing keeps cutting out, you guys. So you're either going to have to refresh or not. I don't know if it's just my stream. A lot of people say it happens all the time. Well, that's crazy. The yield, brother. The yield. The good, like I told you, man, at that one time, having an environment where you just get paid a bunch of money to hold cash, that didn't always exist. So depending on how things play out, I mean, yeah, we might go back. I remember most of my investing world was you were getting paid way less money to do. You were getting paid. I remember when the Fed funds would pay you a quarter of a percent to hold cash. All right, the VIX is on the high. It's a lot of tech. Oh, PGR might be going up in sympathy to AIG. Some of those other ones might be going up. Input long-term stock, 4% divvy right near a 5-year low. Is 4% kind of bad? No, you might have misheard. Usually 4% is the sweet spot. So 3 to 7%. Anything above 7%, that's usually where it starts to get risky. But it all depends on the company itself. I think you should ask yourself, though, if it's a company you would hold for 10 years. Is it going to be around for 10 years? Do you know about it? Like, actually, like, use it, involved in it? Those are usually some of the best indicators. All the insurance plays are going up. So, again, AIG just did another 3-4 after 6 yesterday. That 70% of all the AI insurance patents are held by the 4 biggest insurance companies. I think it's because the buyout. I think it's that offer. Again, we don't have any details on it, but if one of them, again, and these are massive companies, if one of them's going to get bought out, then that might raise the value for everybody else. That's what it seems like, so we'll see. IWM came down. That started off good, but yeah, they flipped too. Who else? Silver and gold. They came down barely up though, but they started red. Gold was red most of the morning here. Officials met in Paris to discuss peace plan. Yeah, or it hit the literally 2 standard deviations and then chilled. Disney's still holding. Those premiums are chilling out, but that was a crazy move still. Now Macy's, the ONONs of the world, the Nikes. If one to hold for 30-day rule, would you consider Bill? Yeah, you could put it in the money market. You're still getting paid on it. You're still getting paid 3.5, just so it's not bad. And that rule applies, again to like money you've never handled before. Big amounts, something where you sell an asset, get a windfall, whatever it may be. Those are the things that, I would kind of chill on, give it 30 days. You make a big trade, you get the most amount of money you've ever touched. Wait on it for a little bit and you'll be good to go. It's a beautiful day in the long-term hood. Long-term covered call. Should you stuck rolling for 6 months? Should you keep rolling? I would, unless you want to give it up. But that's why too, every time this conversation comes up, I've kind of been telling people, try to follow a strict guideline with covered calls, but I do think most people in this environment should just avoid it. Just because, again, we have a lot of upside in the market. And then now, we might return back to that point where covered calls will make sense. Why would they make sense? Does anybody know? Think about what I just showed you. So like I'm saying, a couple months ago, all year, last year, it didn't really make sense to sell covered calls. It didn't make sense to even do puts to sell premium in your long term. It did not make sense at all. Why? Yes, the risk-free rate. So the risk-free rate, that thing I just showed you, was at like 4 or 5%. Right now it's going lower and lower and lower, but it's like most instances you were just getting 4 or 5% on a covered call to put up risk and to do all of these different things. So at this point, it's like you might as well, you might as well not do much. I think you'd be better off if you just chilled. But then again, if you just keep rolling over a play, most of the time, if you're in that situation where you keep rolling it over, that means the stock is going up, so it's your value. If you want to give up your value, that's totally up to you, but I would just roll it till eternity, and because usually it ends up working out. But that's why, too, you just got to make sure. I would avoid getting in that position if it wasn't being heavily compensated, aka it has to be substantially above the risk-free rate now to actually to do it. But now with the yields coming down, and now with the the risk-free rate going lower, maybe next year we might have more opportunities to actually do it. UNH. Now, a couple of things are getting candles here. Again, Dow is still holding. Russell gave it up. NASDAQ almost doubled the loss, but this time half of the loss in the morning, or 80% of it, was all from Oracle and some of those chip sympathies. But now this is kind of everything. I think Apple's the ugliest one. Apple's down by 1.6. And then Microsoft was green. They're barely red now. Amazon's down. Meta's down. Only by a quarter, though. And Synopsys had good earnings, but then they fade in. If financials give up, that'll add some more weakness here. More biotechs are going, though. Again, biotechs are long duration. So like I was saying there, whether you hit the XPI Christmas gift or not, you should really understand what we were talking about and understand the logic to it, because it's going to keep coming up. And that's the long duration, and what just happened yesterday with Powell. It ties in very, very well. Not to mention, just like every year, depending on how the FDA calendar works, you're coming into a nice little window where A lot of catalysts have to come in by now and the end of the year. It's a beautiful day in the neighborhood. Yeah, UPS and Target was up there. I just put that one up. Again, a lot. I mean, think about it. They just damn cut the rates. I feel like some of these, even if they were struggling, look, all the like struggling dividend stocks, the ones that we kind of had on target, I mean, or the ones that we were targeting, they've all kind of came up here today. I think that's the subtle, and then Pfizer was already running, but that's the subtle move. Because again, I don't know. Looking at the risk-free rate at 3.5 now, and then knowing it could potentially go even lower, it's going to be weird once we go back below 3. Again, at one point, I think, what's the highest we were getting? 5.5 or something? Weren't you getting 5 or 6 on the fucking money markets, dude? That's crazy. Yeah, it feels so long ago. Yeah, we're getting old, man. You're getting old. Yeah, that's insane. So again, that's why like some of these, we'll see. We'll find out how next year plays out early, because either this momentum will continue rapidly, or some of those names will continue to yield. Because again, if you're yielding 6% now, 6-7%, that's almost double the risk-free. Okay, Wells Fargo's coming up again. JP Morgan was chilling out. SPY near the bottom. Nasdaq's the worst on the day. I don't know if, I think equal weight's still up. Yeah, equal weight's still up by 0.3. Now Meta's going. So Meta's back to green. Microsoft was the only Mag 7 that was green. Wholesale inventories 0.5. There's Don't Tomata. Uber's going up here a little bit, but then it chilled. Oh, did you guys see the did you see the Waymo? I feel like every week we got a Waymo story, and then CNC's getting a little active here too. It's about 4. Did you guys see what happened? I don't know if you saw it. No, not the standoff. That was last week. So apparently in San Francisco, it only happened once, but now this is like the worry. Some guy was waiting in the trunk. So literally this girl gets into a Waymo, and then this guy is just sitting in the trunk. Yeah, and she's like, what are you doing? And then he says, they put me here. So yeah, they're like, yeah, he was trying to assault her. But they don't, yeah, that's just the, let me see. Waymo trunk. JFlix. Meta. Again, CNC is actually very active right now. Yeah, here it is.
I'm trying to figure this out. Like, I'm over here. Yeah, this shit won't let me out. This shit won't.
Why are you in it?
Huh? They just put me in it.
Who put you in?
The
what?
The people. Yeah, I'm like, that's what I'm asking. That's what I'm saying. Just look.
And I have everything recorded as well. So I appreciate it. We're gonna order a new Waymo. Hopefully this one doesn't pop up.
Dude, it's crazy. That's what I was saying, bro. It's like, you don't know the whole, like, Waymo's a lot of trust in society. It's just these empty cars just running around. OKYO Pharma, it's a very liquid moving up. And the Estee Lauder 52-week high. And then Nasdaq still down. VWAP got a little low. Remember, Thursdays are bad. Again, everybody knows it now, but we're going to see if that actually holds. EU deal on Russian asset freeze gives bloc more power to immobilize assets. I don't think the cameras would do anything. That's what I'm, dude, it's not like, I called the support on Waymo. It just takes you to like a call center. And they're like, oh, sorry. Oh, okay. Then you got to get through the first AI talking to you. But Waymo, bro, I think they're in San Diego now. They're about to be. They're getting them everywhere. I'm still a fan. I'm just going to check the trunk now. That's all. AEM, AIG, C Estee Lauder. It's a beautiful day in the long-term hood. Check the glove box as well. Is there gonna be a fucking leprechaun? Ooh, they're after me, Lucky Waymo! Roblo. Barrick. All right, you're kind of picking up here on the short-term velocity here. It's kind of spread out. Let's get a checkup. Well, show me what you working with. So S&P 350 in the green, 150 in the red. So that's why the equal weight's still up. Nasdaq 57 in the red, 43 in the green. And then the Dow Jones, that's our leader today. Dow Jones 20 green, 10 in the red. Again, with NVIDIA being the second lowest, and then Caterpillar's down. Yeah, look at the high ticker slowly picking up. It's a lot of biotechs though. So yeah, that's what's kind of picking back up. Oh, you got a second job? Let's go, baby. So what are you doing now? So you got taxes and what else? Yeah, all the alcohol stocks are kind of getting a lift here. Anything dividend, I think it's just because the rates, bro. I think as long as nothing is going to change rapidly, if the company has good fundamentals, and then now the rates are lower, they're going to get a little bit more of a boost. Yeah, Target, DG, Walmart, UPS, TAP, anything with a dividend. But like Pfizer's not going up as much, but then they kind of already front ran it. Yeah, we got to front run some of the divvies. I think we'll still get a little bit more of an opportunity, but it's definitely, whether you realize it or not, it's happening. But then the question is going to be that path forward. But if the Fed, again, it helps if Powell is being realistic. Again, being worried about employment, not getting scared of inflation, because inflation and the dividends, people don't like that. But, if it's more tied into this idea that, the Fed is actually going to be worried about that, the inflation, or the jobs, that should support these dividend stocks. Oracle and Google launch Oracle Cloud Database in Canada. What did they say? They said they want neutrality. They said chip neutrality. Yeah, again, XBI is long duration. So I was trying to give you guys hints at it. So like for real, if you missed out on the XBI play, it's unfortunate. You could have blamed me. I told you could have just said, Josh, I got you a gift. I lost on XBI. But now you have to be like, thank you, Josh. Thank you for the present. Because that was a dope ass present, dog. You know what I'm saying? That was a dope ass present. But I want you to really understand it. That's the second gift, is understanding long duration stocks. We've talked about it for years. We've talked about it a lot more when people were bringing up long duration and financial conditions, but that was the little window everybody was ignoring. The Fed was cutting rates multiple times, just got another cut. There's a certain set of stocks that are going to benefit, and you have to understand why. Because now stocks that need more time to profit or need to rely on certain funding, this is going to this opened up a door for them. This is opening up and giving them more time. So that's exactly what we have right now. Yeah, the savings rates come down. That's exactly it. Yeah, 100%. But that's the crazy part. That was only one portion of why I was banging the table on some of these names. It's not only just that the rates come down and then it's changing their relative value. It was because some of these stocks are fucking cash heavy, and they cash flow heavy, and they make a lot of money, and none of these companies are disappearing in 10 years. And that's why, and then I'm telling you, markets up 20, markets up 30, gold is up 50, silver up 80, you name it. All these things were so high. And again, you know, most people were looking around and they were like, oh, I lost, I missed out, I have no opportunity. And people are thinking, oh, everything's so expensive. Meanwhile, there was just some real, it's not sexy. None of these are fucking sexy. None of them are going to get you excited. None of them are going to scale up to $20 billion a quarter of revenue. You know what I'm saying? But they're going to keep making billions of dollars every single quarter, pretty much no matter what. And now the situation is helping them, and they were paying out a tremendous amount compared to now where the rates are headed. So it was the value. It was the value, the cash flow, and then you mix in a stable dividend. So that's why I was saying, though, the stability of the dividend and all that. That's why I think UPS is still unstable, but you guys already got a year at 7%. And now, especially with the rates going lower, I think that makes a little bit more. They could still cut the rate, but even if they cut the rate, you're still going to be above the risk-free most likely. And then Target was a really good one. I think you could have got it a little bit lower there too, but again, these are giving you now the value, the stability, but then you get to compare it to where the divvies are at. That Migi's going up. Oracle, so again, they were just that Google headline, but it literally hit 2 standards and then just popped. Yeah, Meta's kind of what started this here as far as tech. Otherwise, it was the equal weight. Again, you got 350 names on the SPY that are in the green. It's a beautiful day in the long-term hood. Microsoft too, that was the first leader in the AM. All right, well, SPY's getting back to open, man. I don't know. NASDAQ's down. We're going to see what happens on Thursday. Oh, shit. Bro, I just tripped on the thing. You just want to tell me you're buying IWM calls? Come on, brother. What do you think I'm going to say? Here, ask the chat. Chat, what do you think I'm going to do next? I want real information, okay? That's the problem. We brought up IWM calls yesterday, man. So telling me at a terrible time, I'm not a fan of it, man. So, you know what I'm saying? I think the rate cuts got you guys juiced today for some reason. But yeah, man. Unfortunately, have a Merry Christmas. But you know the rules, bro. You guys know the rules. You know, this morning, I like info. If you're going to share with me standard deviations, tell me stuff. But you guys don't need we don't want any of that. Again, if you guys want to go back to it, let me know. But, I mean, the reality is that most of the people who aren't banned, everybody was not too many people want to go back. Is the vibe I got, and that's what I'm saying. It's way easier, and if those of you are listening, picking up on the info, you have such an edge right now, because now you're not competing with, you know, a couple thousand more people not listening, just front running and doing whatever. But yeah, you know, most people know my behavior right now. I think the Powell adrenaline did hit, and then again, I'm telling you all these plays that we called out some great ones this year. Some of them you could have just bought and held till this day, you would have just been a lot better. But yeah, we're not here to pump, man. I'm here to give you guys info on all of it. Again, even IWM, there's a reason why we even said it during Powell yesterday and called it a day. It is. I think I mean, again, I like good info, and I think we could share some good info, and, you know, I'm not trying to stop that, but I want to, you know, I don't want it to be so simple and pumpy. But you guys got to get it where you fit in. You know, you have a lot of environments you could go and do that in now. That's the beauty of it. Ironically enough, there's less people who do it like this. So you don't have to do it here. Go to where you need to. But then again, don't let me get in the way. You got to go full. Go 100%. Maybe. Not with some of them. I don't know. That could be the Chadvicks from yesterday. They lagged me hard this morning, bro. I can't remember the last time I had 4 or 5 cutouts in the AM. But yeah, just the content of some of what you guys were saying and asking. I'm picking up on the vibe today. Like I'm saying, I don't know if it's the rate cuts. We talked about a couple of opportunities, but yeah, just don't get too crazy. There's a code, baby. I agree. There's honor. You know that? There's a code to the streets, to the Wall Street. It's very rare. You know what I'm saying? It's very crazy with how the world has moved, bro. And looking at like the financial world, oh, we're batshit insane, bro. You know, we do, yes. So I don't know. If you don't have honor, you don't have a code, you're not going to like this. But we do have a code. I think we could all even help each other out. But it's going to be real. It's not going to be this bullshit. Buy this, buy that. This, you know, oh, this is going. This is going to go. That's info. And that's what I'm saying. Most of these plays I've shared with you, tell me I've got so many rants behind them. Like I'm saying, we could go long duration, we could go silver, we could go anything from all of the long-term plays, Intel, even the critical minerals. Every single one of these plays, we have done some really deep dives on the information. And then again, I think it brought out a lot in that in you guys too, because those of you who were hanging around and realized you're not going to just get a fucking play handed to you. You got to play if you hunted. You're going to turn into a hunter. And then again, you earn it like that. I think you're going to. And then you also see too, just understand the danger. Like for real, man, this is part of the code. You see how crazy everybody is. You see how wild it is, and just understand, bro, like people get hurt. It's just simple as that. And I told you guys, like gamblers, man, they don't just take down themselves, they take down others. So you don't want to, you guys don't want to be responsible for influencing people. I sleep good every night. You know that? I sleep very, very well. And I know what my impact is. And, I've got to make my mistakes too, but you don't want to be responsible for somebody slipping. You don't want one of the little ones to fall. But that's why too, I hope all of this, you may not like it, some of you, and it may feel like you're getting picked on sometimes, but that's not the goal. The goal is to get you to really rise to the occasion, man. And I really want you to go and look on your own and figure some things out. But the era of play sharing is over, unfortunately. TMC, check the minerals. All of them, actually. So look, because they were saying, remember, Greer, we got hinted at some of those. I had those on my list this morning. But yeah, those are starting to work. But again, try to get me some info. That's good, man. Amen. We have bigger and better. 2020 was fun and all that, but no, this is more locked in than ever. And I want to see more out of y'all. You guys got a great opportunity, and you can't blow it not thinking. You need to push your mind to the highest. You are the commander. If we're crazy because we saved 10, I'm a lunatic. Oh, man. That's a wild one. Lily. So Lily just woke back up. That could have been a double dip. I had that one on my list too. So again, they had the Retro True Tide. It was like a phase 3 trial, but it was very effective on every single endpoint. Ukraine says hit Russian fertilizer plant. Is that why the MOS went up? So those all gapped up, and people were saying that earlier. But they're not moving with news. And then minerals are all going. Something's happening. USAR and the other ones. Oh, what do you get your favorite cult leader for Christmas? A no YOLO polo? Oh, you got me a gift, dog. My brother, I got you gifts. You have already given me gifts. Don't tell me you got me one, bro. You got me a no YOLO polo? It's a coat. Harda. Oh, my brother. Bro, legal. You got me a massage last week, dog. What's up, bro? It's legal, man. Y'all been giving me too many blessings. Let's see. I'm already checking, dog. I want to see the no YOLO polo. Saved it. You didn't give me all of these, did you? Or do I get to pick one? Bro. I want the It's a Cult one. I like the That's That one. The Save 10. Dude, I need it. And then I'll get a video done. That'll be that might be my outfit for the first video of next year. No YOLO polo, son. No, have you seen the one he had in the video? The It's a Cult one? Dude, it goes so fucking hard. So I will. I like the idea. Thank you, brother. Thank you. Woo! That's what I'm talking about. And then 2, I told y'all the other day, if y'all really want to get me a gift, man, if you have any, you're like, I want to get Josh a Christmas gift. I just want a wise man to pray for me. That's it. That's it. I don't want, if you a fool, I don't want no fool prayer. No. That's what I'm telling you. So if you help yourself out and you approach wisdom and you walk in it and live in it, brother, pray for me. That's a gift. You have no idea. It warms my heart. And it's good to know you have that. It's good reciprocity. I can't even say that. I want the prayer of a wise man. You know what I'm saying? I want the prayer of a righteous man. I want somebody living in it. That's it. That goes a very long way. That's just what I believe. That's like a true, genuine belief. That's what I'm saying. It's very effective. Thai PM plans to dissolve parliament. I know they're talking with Trump today to end that war. I do appreciate the longer term ideas. And listen, we'll be able to we could talk short term ideas, but the problem is priority. And that's what I'm saying. And like, I don't know if you guys have noticed it. It's just that some people, they're not really trying to share ideas with you. Like, have you noticed? You get what I'm saying? Like, it's just there's another intention on the back end. That's why I'm saying, like, I've shared all of these short-term play ideas that we've even shared. I mean, they've been backed with a lot more info, and that's what I'm saying. I would love to share the info with you guys, but it should end with the info. It shouldn't really end with do this, do that. And that's why I hope I've led you in the right places, but also gave you enough room to make a true, genuine decision off of it without kind of being influenced and without it being from a different motive. Again, that's why I haven't even been posting strike prices, none of that shit. It's because I don't know. It's just too shady. They've all done that. Telling my kids to pray for you. Oh, amen, brother. And that's why, bro, I want y'all to walk good. Finish out this year. Understand the gateway. You get to really determine how you're going to walk into next year. You could do it right now. And that's why, too, being live wise, do wise, there is a power that comes from it. And that's what I'm saying, man. A righteous man, a wise man, your prayer is, it's a valuable thing. So that's it. You help yourself so that you could help others. That's how it's going to be. And that's why if you have helped yourself this year, you've grown in discipline, you've grown in work, effort, in straightforwardness and clarity. I think you could give a good blessing. You know what I'm saying? You could give a good blessing, baby. Because everything else could be replaced. Everything else could be lost. But the wisdom, man, the Lord, don't get me started this morning, guys. Don't get me started. Well, that's the thing. So do you not get it? You're going to be like, what an asshole. Did he just only ask for wise people to pray for him? I did. Because you know what that means? If you haven't been wise, that's okay. But you have to work on that. You see what I'm saying? You can become wise. All of you. All of you could become righteous. You already have it in you, I would argue. It's already in you. So that's why I'm saying, you know, if anything, the gift should be really focusing and working on yourself and really making sure that you accomplish that coming into next year. Because you build yourself up, brother, you're going to be valuable to many, many people. And you're going to be able to really spread your blessing. So it starts with you. It really, really does. So amen, baby. Amen. I pray the Lord bless you, keep you, make it shine his face and be gracious. And the Lord turn his face to you and give peace, baby. Amen. Amen, bro. Amen. And the rain, it's the sun and the rain on everybody equally, on the righteous and unrighteous. That's it. I pray we keep going, no matter what. Amen. Amen. All right, man. A lot of things came up here. High Taker's still fully gassed almost. I think very big, subtle dividend move. We'll see if they hold up, though. They might give up by the end of the day. People might just be getting excited. Like I'm saying, even the chat. Like, I don't know. People kind of getting some post-Powell excitement. NASDAQ's recovered half of that loss at the bottom. Russell is back up again. So are the biotechs. Dow is the leader still. And then we're going to see what happens with the SPY. But equal weight's already doing it. Industrial's killing it, too. Ba-da-ba-ba-ba. I'm in the cult. Hey. Happy Honda days. Long-term stocks, long-term stocks, long-term all the way. Oh, what fun it is to hold and always can save. Hey, long-term stocks, long-term all the way. I hold 10 for 10 and everything goes to the heavens. Netflix. All right, I need to go pee. Follow me on Instagram at the Trading Fraternity, but don't follow me. Follow the Lord. You know that?
Part of it public.
Follow the Lord and follow your purpose.
All over the place, but a lot of interesting
Amen.
stock picks, a lot of props. Thank you very much.
Well,
Glad to
we're
have
always
you.
a privilege to be
You're at the
here,
center of a
and
lot
I
of
didn't
the
give you
news.
any stock picks, but I gave you some baseball to think about,
I don't know if he's going to end.
Mario Cavalli.
and basketball, and soccer.
Braves,
All right.
Man
And the movie
U.
theater business.
Yeah. All right. Good to see you, Mario.
Always a privilege and pleasure. Thank
Never
you for
stop.
having
It's
me.
amazing. All right, Disney CEO Bob Iger, OpenAI CEO Sam Altman, they will be on the other side of this break. Of course, announcing that partnership between the two, the use of all those Disney characters on Sora. We'll be right back.
Powell is. Oh, what fun it is to ride in a one horse. Did you guys hear me? No? So I don't know if you. I kept it unmuted. I knew they were gonna end it. I wanted a carbone. Are we back or so back? As I was saying, the one thing that moved was the IWM. That's already, the Russell is already broken out. So remember, Chop City. The only thing out of Chop City right now is the Russell. So we're gonna see how it all plays out. Yeah, is it at 0.86 of book value? When does TAP report? I'm just glad we fucking got the dividend, dude. I can't believe we got to secure the next divvy and then it went up. So I don't know if you guys noticed how weird that was. Because you still could have got it on that dividend day and it went down and it didn't do the dividend drop. That's what I was saying, because it's like most of the times if you wait till after the divvy or the ex-dividend, you'll get it cheaper. But this time you could have bought it cheaper on dividend day and then it didn't go any lower. I'm getting my vitamins. Let's see the valuation. We should go over a lot of valuations today. Natural gas storage numbers. I still didn't go pee. I only got my carbo. End of February. What vitamins? A lot. Oh, Tyree, I got the BPC spray. I'm gonna try it. But then I heard something really bad. Not about the spray, but about BPC. But let me go pee, and I'll give you guys a vitamin talk if you guys want a vitamin talk. Vitamin and sups. Okay. Long-term stocks.
Diversification. You look at this AI trade, and in the public markets, it is a very constant.
Disney and OpenAI announcing what they're calling a landmark agreement to bring the beloved characters from Disney's brands to Sora, of course, the short form video platform of OpenAI. And as we've been promoting all morning, we are now joined by Disney CEO Bob Iger, along with OpenAI CEO Sam Altman. And Sam, very happy to have you on the program, I believe, for what's the first time. Bob, you and I have done this a few times. I want to start with you, if I can, Bob. Just first of all, why are you doing this deal, and what led to it?
Well, this is a great opportunity for the company to enable consumers to engage with our characters on what is probably the most modern of technology and media platforms today. And it not only gives consumers or users an opportunity to do so, but it also is significant because in this deal, OpenAI is both respecting and valuing our creativity, both our characters, but also those that have created those characters. So it gives us an opportunity really to play a part in what is really a breathtaking growth in essentially AI and new forms of media and entertainment.
Does it represent any risks for you? When I think about it, I know the voices of actors are not going to be a part of this. It's going to be the images, Bob. But that said, your own Imagineers, those who've created, obviously, these untold stories for you that have made the company it is, do they look at this announcement and worry at some point people who are manipulating short-term video using your characters are going to replace them?
Well, first
Oh
of
shit,
all,
this is Sam and Bob.
200 characters of Sora to create their own, basically, videos.
Hold on, yeah, I kind of want to watch
Sora
this.
And those characters. We are
But you got some
not
good ones in
including
there.
name and likeness, nor are we including character voices. And so, in reality, this does not in any way represent a threat to the creators at all. In fact, the opposite. I think it honors them and respects them, in part because there's a license fee associated with it. The other thing it does is it enables us to be comfortable that
I can't believe it. So now if you own Disney, you technically got like $1 billion stake in OpenAI.
Really there's nothing for
That's
us to
so
be
fucking
concerned
weird.
about from a consumer
I never
perspective,
expected that one.
meaning this will be a safe environment and a safe way for consumers to engage with
Oh shit,
our
silver.
characters in a new way. And so, and also let's be mindful of the fact that these are 30-second videos. So we're not talking about creating either shorts or movies for that matter. And we know, because we've seen a significant amount of growth in consumption of short-form video. We also think
that's
this is an
wild,
area where
bro.
almost everybody can be a creator of sorts, and we've seen that.
Like that was not what I
breathtaking
I would have never
fashion on other
expected.
platforms. And
Our
this is a way
Disney
for us as a
exposure would get you
company, really,
OpenAI exposure.
to provide experiences to particularly younger.
Yeah, silver's
audiences,
going up. A couple
engaging with our
biotech still
characters
too,
in
and
new
gold.
Yeah, Sam, obviously Sora's success has been significant. It's one of the
Why does
reasons
Sam
you
look so
cite for all
stressed
the
out?
compute that you need.
He's
to-
like, I need money, and I have to sell to
continue
Disney.
build, given the usage rates there. How
There
do
you go,
view it?
smile,
Do you
cutie pie.
expect that it's in fact going to lead to more activity on the platform, the ability to use these characters?
Yeah, we hear so much from users about how much they love Disney's characters. Disney, I think, is the greatest storytelling company in the world, bar none, and people really want to connect with Disney characters and express creativity in new ways. And we are confident from everything we've heard from our users that they're going to respond very well to being able to do this. And I hope that it'll unleash a sort of a whole new way that people use this technology.
A whole new world filled with AI slop for days. No one to copyright or say what's right. Now I'm in a whole new.
The amount of latent creativity in the world. That if you lower the effort, skill, time required to create new things, people very quickly are able to bring ideas to life and make new kinds of entertainment, art, code,
Sam said he looks like he did everything
with this
they
new
said.
tool of AI. And if we can enable
For real,
them to do
though.
that and give them more flexibility, like with these 200 Disney characters, I don't know exactly what we're going to see, but I think people will come up with amazing kinds of ideas.
Right, and to that point, and I know Sarah's very concerned here about the princesses. There are going to be guardrails around the usage. Is that right, Sam?
Yeah,
It's not. I think it's reversed,
Disney
man.
is a great partner.
Everybody
for us for
keeps
this
saying
because
it's like he's
they've
trying
been
to
so
become
willing
too big to fail, but
work
like
out how this new world is
low
gonna work
key, I
together.
think all these
But
companies are
there
they're
will, of
doing
course, be
this to
guardrails.
siphon off the IP.
It's very important that we enable
Worst case
Disney to set
scenario,
and
Disney,
evolve those guardrails over
Microsoft,
time.
everyone's
But,
just gonna
they
walk
will-
away with
they
the
will, of course,
OpenAI intellectual
Bob, is the
property
deal
and all these
exclusive,
other
or
rights,
is it possible
regardless
for you
of
to
what
go
the
out
fuck
and
Sam
find a
ends up
similar
doing.
deal with other
If Sam ends up
short,
succeeding, they
short-form
win.
video,
But then even if
or
he
companies that
fails, they
provide
still
that-
win.
that ability.
This is a 3-year license agreement, and there is exclusivity.
Oh, 3 years? That's
basically
it?
The beginning of the 3-year agreement. So yes, it is partially exclusive.
So for the first year, for example, I would guess something along
So yeah,
those lines?
3 years. That's when all the
That-
other
that would
bond
be a good
payments will be
guess.
due. That were issued 3-4
Now, why
years
did you
ago.
decide
Remember,
to
it's like a
invest $1
5 to
billion
7 year
in
cycle,
OpenAI
or
along
4
with
to
this
7.
deal?
Well, obviously, we've been mindful of the significant
Bob doesn't
growth
look
in
happy,
AI
and
to
Sam
begin
just
with.
looks
I'm
guilty.
extremely
I
impressed
don't know
with
how
the
to explain
progress
it.
that Sam and
But
OpenAI have made.
Bob just sitting
And,
there with his
that
arms
includes,
crossed.
By the way, as I said earlier, their agreement to both honor and value and respect our content. And we want to participate in
Merck
in-
going
in
up.
what
Again, there's
Sam is
something related with
creating and what
Merck.
his team is creating.
Or that was
We think
yesterday.
This is a good investment for the company. It's kind of a way in of sorts for us to appreciate even more what is obviously something that has significance in terms of the long-term impact on our business.
And there are warrants that came along with it. I guess you're not giving us any specifics, though, in terms of where those are struck. Is that correct?
That's
I
correct.
think that's correct.
Okay.
Yes, they both are
At the same
told we're not
time
going to talk
you
about
announced
that.
this deal. I reported on a cease and desist letter that was sent to Google. I would imagine there's not a
That's not a good
coincidence in
idea. That's
terms
not
of the
good.
timing.
Because if it was a good
curious
like
as to what your
valuation,
conversations have
you'd
been
want
like
to
with
tell
other
everybody,
platforms,
because then your
and why
valuation
you
goes
chose
higher.
to make that move today.
Well, we've been aggressive at protecting our IP, and we've gone after other companies that have not honored our IP, not respected our IP, not valued it. And this is another example of us doing just that. We've been in conversation with Google, basically expressing our concerns about this, and ultimately, because we didn't really make any progress, the conversations didn't bear fruit, we felt we had no choice but to send them a cease and desist.
And Sam, on that same note, did your conversations with Bob and you're reaching a deal here come out of conversations around IP, or can you give us some sense as to how we got here?
Well, we were stealing a
always
bunch of
wanted
shit,
to
and now
respect IP.
we
When
needed
launched
money.
Sora initially, we had a lot of blocks in place, but we knew that if there was one company that we wanted to start partnering with, Disney was the obvious one. And so we have had a long discussion going with Disney, and we found them to be a sort of open-minded partner as this technology has evolved. And it was very clear to us that we really wanted to find a deal to do here.
Is it possible you'll sign similar deals with other companies as well?
The demand for Disney characters in particular from our users is sort of off the charts, so I won't rule out anything in the future, but we think this alone is going to be a wonderful start for what our customers want to do when it comes to putting themselves in that one lightsaber scene from lightsaber fight from Star Wars, or making like a Buzz Lightyear custom birthday video for their kid. I think this is going to be like quite a big deal for our users, and then we can reevaluate from there.
So I just want to understand, sort of, you're looking at obviously what people are doing, and you're seeing them interact with these Disney characters on a frequent basis. I guess that's what I'm hearing, right, Sam?
Well, they'd like to be interacting. There's desire to do it. They haven't been able to yet.
Yeah, I don't know if the demand is real.
Start, by the way?
I think Bob Iger said, listen,
I don't know if we
found over 1 billion cases of you using our IP. If you don't do this deal, we're going to charge you a fucking $1 per, or $20 and lawyer fees.
Which is also a part of the
it seems like this was I think they spun it to sound good, but I think this was a result of IP infringement, essentially.
On our platform.
That's why Bob's kind of like, yeah, well, Google didn't respond, and Sam just has to be there so he doesn't get fined.
Do that. Initially, what we'll do is we'll curate,
and then it gives Sam a little bit of money up front
on the Sora platform and put them on.
I think Disney's paying them. That's the thing. I think Disney's probably paying them, and then Disney's walking away with shit and IP as well, and then they don't have to. And then OpenAI gets a little bit of money, and then they don't get sued.
Plus user to look at what people have been creating that you guys have decided is worthy of showcasing.
Yes, and then ultimately to enable users to prompt Sora to create what they want to create on our platform. Yeah, that's a big step for us.
Sam, I'd love to come to you if I can as well.
There you go, David. You see,
what am I looking at? Wait, what was I looking at? Yeah.
Well, you put it up very quickly, but there you go. There's a case of someone who wants to have a race against Lightning McQueen from Cars.
Yeah, so Disney's walking away with their own AI pretty much. They can now create their own content.
Surfing with Stitch.
And then they got somebody to cave too.
Bob? It is inclusive of most of the Disney characters that we.
Sora will be able to generate short user videos.
They range far and wide at this point.
I'm trying to see the full details.
And Marvel, not to mention The Simpsons. I mean, it goes all over the place. It's not just Mickey Mouse.
There are many characters here.
Yeah, Disney calls it a significant step in setting meaningful standards for responsible AI.
Interesting to see what people do with them. And again, it's a great step for us. We've always been forward thinking when it comes to applying technology.
OpenAI doesn't include any talent likenesses and voices.
Closer and a higher level to improve our business, to essentially create new experiences in general. We were the first to license television shows and movies to the iTunes platform back in 2005 and 2006 as an example. And this is another step in essentially that direction, which is to get on board with what is clearly an incredibly impactful and profound wave in terms of change in our society and certainly change in our industry.
Yeah, I asked this a bit earlier, but I just want to come back to it. I mean, I'm curious, Bob, what you think the reaction is in your company itself.
They're not going to fire all the animators because you still use animators. Did you see Coca-Cola? So Coca-Cola made an AI ad, but like you have to keep prompting it over and over again, and then you still need to like tweak it.
In using AI is to continue to honor, respect.
I think this was enforcement. I think this was Disney was going to fuck up OpenAI if they didn't take this deal. And now Disney has their own AI video generator that they could give to people without having to go through OpenAI. Does that make sense? So now Disney's going to start selling this to like kids and shit or bundle it. And then they're just using what Sam created. And then he gave them $1 billion and then they get to buy a stake in the company of OpenAI, and then now OpenAI doesn't get sued for the last 3 years of copyright infringement. And now Disney sets the standard and has somebody who caved, and now they're going to be like, see, so this is how it should be done.
That users will be able to engage with a character that they've loved.
That's my opinion.
Years, so many decades. In really modern.
Because again, this was unexpected, and it like I'm saying, why the fuck would Disney own a stake in OpenAI now?
Kind of a short of its own, about 8 minutes long. Obviously, a lot longer than 30 seconds, but nonetheless not particularly.
Oh, they
long.
did say they were going to have a TikTok competitor.
I want to come to you on some broader issues in the time that we have here as well. You're going to exit the year, I believe, with about 1.9 gigawatts of compute.
Yeah, it speeds up the processed iterations when you need a person to oversee it. That's why I think a lot of people are. They think you can't just have AI for animation and like ads and shit like that. It could do a lot, but you do still need You may not need as
Yes,
many
and we
people,
expect
but
this to drive
you
incremental
definitely
revenue,
need a
and
human.
Also just delightful services for our users. We have a lot of other things that we expect will drive incremental revenue, but the only way we can deliver on that is with more compute. So we will continue to build out compute. We'll try to do a big multiple on that 1.9 gigawatts over the course of the next year, and we'll keep going from there.
Yeah, we've been talking a lot about Oracle this morning, of course. And so
Have you
much of
paid
the,
them?
Investment perspective on that company comes back to your own and your ability to make good on the $300 billion commitment you've made in terms of buying compute from them.
Don't bring this
Why are
up.
you confident? Because others certainly
He
are
already
at least
squirmed a little.
questioning, in your ability to meet that obligation over these next 5 years, Sam.
The value that we see people getting from this technology and thus their willingness to pay already today, to say nothing of the models that we have coming in the coming months and years, makes us confident that we will be able to significantly ramp revenue. It's obviously unusual to be growing this fast at this kind of scale, but it is what we see in our current data. The model's ability to do really
Trump, the
increasingly
stock market
valuable
just hit an
economic
all-time
work,
high.
larger and larger chunks.
When will the fake
I
polls
think
show
we'll
I'm
start to
doing
see
a
this with
great
the next
job on the
model,
economy
then
and
more
much
the
more?
next one and the one after that.
Sir, only the Russell did,
we
sir.
are confident
Only
we
the,
can continue
and the
to drive
Russell's
the
filled with
revenue
like
growth to meet this
30%
compute ramp.
scams.
Without the compute ramp, of course, we can't drive the revenue growth.
Still!
But we see way more reasons to be optimistic than reasons to be pessimistic. Of course, we'll continue to be responsible, and of course, we'll adjust our plans if as necessary if something happens that's not what we expect. But given what we see right now, the demand in the market is pretty extreme, and the overhang of what these models are capable of that the world has not yet figured out how to build into their workflows is also quite significant.
Right. You know, I do wonder, though, specific to Sora and the discussion we're having, it's more expensive for you, right? I mean, it requires more compute. And I would assume, are you losing more money on every Sora video than on a simple query? And do you start charging in a significant way, particularly given you're going to be paying a licensing fee as well to Disney?
We do charge today for storage generation.
So yeah, Sam is going to pay the licensing. This is very. There's way more to this deal.
To evolve the business model there, but users have not indicated any lack of willingness to pay for generating videos that they love. In fact, if anything, there's been much more of that than we initially expected. So yes, it's more expensive, but people pay much more and expect to pay much more than they do for an image.
And you see price elasticity there in terms of what you can charge?
It seems like it.
I have always wanted to be a Disney princess. Sam,
there you go.
It's Sarah. There we go.
There
Thanks
you
for
go.
The solution.
Yes.
Look, as you know, in the market, it's gone from very optimistic to a little more scrutiny on the AI trade. And I know you're not public, but there are questions, for instance, following up on the revenue question. Can you tell us a little bit about trends in ChatGPT since Gemini 3 was launched by Google and outperformed a lot of those
Disney's
AI
going to pay
models?
them $1 billion, then they get a stake,
Gemini
and then the
3 has had less of
warrants.
an impact
But then
on
again, they
our
just
metrics
acknowledge
than
that
maybe
OpenAI is
we
going to
feared.
also pay.
We will very soon.
Yeah, bro.
launch a new
Spot
model that we're
silver is
quite
at
excited about, as well as
63.22.
a handful of other features in response to their launch. You know, we have twice before seen a competitive threat, and I believe that when a competitive threat happens, you want to focus on it, deal with it quickly. We call that a code red, sort of a 6 or 8 week focus period, and then you deal with whatever you're going to deal with, and you know, get back to a position of clear leadership and move on. So that's what we're doing with Gemini. This is a pretty standard thing for us. I expect we'll exit it by January in a very strong position.
Yeah, because that's sort of the question now is it's obviously becoming a very competitive race, both technologically and for market share. So how do you expect the sort of market share battle to play out, both on the consumer side and the enterprise side?
On the consumer side, there's no company I would want to trade positions with. It will clearly be competitive, but I love where we are relative to anybody else. I think ChatGPT is the, by far market share leader, and with these upcoming launches, I expect that distance to increase, not decrease. I expect our market share to go up. The enterprise side is still earlier. We intend to go win there, but we have a lot of work in front of us, and it won't be easy. The set of services we want to offer finally has, I think, come into clarity, and the models are getting strong enough that I think enterprises can really transform. But that will be one of the big stories of 2026, is the companies competing for that. Again, I love the position we're in, and I think our strength in consumer is going to really translate, and we're going to try our hardest to go win enterprise.
And Sam, to those who say, well, simply looking at it on a cost per token per dollar per watt, to quote Satya Nadella, one of your partners, you guys are not going to be able to beat Alphabet. How do you respond?
We expect to beat Alphabet. We're incredibly excited about our upcoming chip.
Your upcoming chip. When do you expect to actually be deploying that?
As soon as I said that, I realized you were going to ask me. We're not ready to talk about that part yet, but we will talk about it. And we are very focused on having the cheapest cost per token in the industry at the highest level of intelligence.
Yeah, Bob, I know you've been listening here, and I'm curious as to how you viewed the landscape as well in terms of who you wanted to partner with, and whether ChatGPT was always sort of the #1 target.
Sam and I first met actually when I was retired from Disney in 2022, and he gave me a bit of a roadmap of where OpenAI and AI was going. And everything that he predicted has come true a lot faster, actually, than he thought would unfold or would happen when we met in 2022. So we've been extremely impressed with OpenAI's growth and what Sam and his team have been able to achieve. And of course, on top of that was their appreciation for our content and their willingness to license it and their willingness to help us protect it and to protect value. So we're very excited about what we see. We also think there are great opportunities for our company to license other product from OpenAI to make our company more efficient, to grow the top line, to essentially accomplish a lot of what we feel we need to accomplish in the years ahead.
Yeah, well, you say you're going to become a major customer of OpenAI. What does that mean, Bob?
Again, we think there are a lot of opportunities here beyond Sora to license product from OpenAI, and we intend to do just that.
And as you view this significant change in terms of the ability.
Oh shit, was I muted? Did you guys hear it? The Google. You moved down on that Google chip news. Was Sam saying it? I think I was muted. So keep eyes on that. And then Silver going crazy.
To Disney.
But yeah, him talking about the little chip. It was a little slip, but it moved it around a little.
It's interesting, David. We've always viewed technological advance as opportunity, not threat. First of all, you can't do anything about it. No human generation has ever stood in the way of technological advance, and we don't intend to try. And so we've always felt that if it's going to happen, including disruption of our current business models, then we should get on board and figure out how we advantage our company and our shareholders, by moving forward with a sense of optimism and being aggressive about it. Someone once said to me that creativity is the new productivity, and I think you're starting to see that more and more. And Sam alluded to it earlier when he talked about just people liking to create or enjoying the creative process themselves, whether they're creating short-form videos or all sorts of other things that this technology enables. So it's going to happen regardless, and we'd rather participate in the rather dramatic growth rather than just watching it happen and essentially being disrupted by it. So we think this is actually a way for us to be part of these developments as opposed to be harmed by them.
Yeah. Interesting listening to you. Of course, it takes me in part to what I've been covering nonstop, which is the fight over Warner Brothers Discovery, Bob. And one of the key arguments from an antitrust perspective that Netflix will make is that we're not just streaming. Streaming is not just us and HBO and Disney Plus. It includes Sora and Instagram and TikTok and so many other platforms. How do you view that?
Well, one thing, it's nice to be an observer and not a participant in this. 8 years ago, we announced a deal with Rupert Murdoch to buy a number of the assets of 20th Century Fox at that point. And we were actually, in many respects, when you look at what's going on, we were ahead of the game, so to speak, in that we saw the coming wave of streaming already had begun. And we were going into that business, and we felt we needed not only more volume in terms of content, but more quality IP, franchises and brands, and also more talent. And so thinking of what the world could become, we jumped on board back then. And we're certainly glad we have, because now the companies are fully integrated, and with it came control of Hulu. And that obviously has been very significant and will continue to be in terms of our growth of streaming. So that's one, in effect, position that we're taking is kind of looking at what we did and now looking at what others have determined they must do in order to succeed going forward. We don't have, you know, skin in the game, so to speak here. Except
no, but you got a view. You definitely have a view. Yeah.
Well, I think if I were a regulator looking at this combination, I'd look at a few things. First of all, I would look at what the impact is on the consumer. You know, will one
bonds
company
getting
end up
clapped.
with pricing leverage that
I don't know why. Like I said, the bonds are gonna add some easy support or a little bit more bumpiness. You want them to get a bid.
Of streaming subscriptions across the world, really. You know, does that ultimately give Netflix pricing leverage over the consumer that it might not necessarily be healthy? Additionally, I'd look at what the impact might be on what I'll call the creative community, but also on the ecosystem of television and films, particularly motion pictures. That, you know, these movie theaters, which obviously run our films worldwide, operate with relatively thin margins, and they require not only volume, but they require interaction with these films and these movie companies that give them the ability to monetize successfully. That's a very, very important global business, and I think it's, you know, we've been certainly participating in it in a very big way. We've had $33 billion films in the last 20 years, and you know, we're mindful of protecting the health of that business. It's very important to the
airlines again. I feel like they've been doing that every day.
Media ecosystem.
You just randomly pop.
Well, what I'm hearing you say certainly sounds like you'd prefer Paramount as the owner of Warner Brothers rather than Netflix. Will you make that case to regulators at all in terms of this process?
We haven't determined whether we'll take a position or not, but I was suggesting what regulators should be looking at.
Okay. And do you view Netflix as a more serious competitor than if they should prevail here?
I'd rather not say anything more than I've said.
Okay. Well, we're coming to the end.
I feel like they're all in bad moods.
Certainly appreciate it. But Sam, let me sort of end with you.
Sam's just like, this is a humiliation ritual for Sam. Bob is just pissed. I feel like Bob is just not this whole thing, bro. And then CNBC's like, they're like, ask him about the money.
Faster than we thought, and I was
ask him about regulators.
Our 10-year anniversary from when we announced OpenAI, and we have got some incredible new models. In particular, models that can really do the sort of valuable, difficult knowledge work tasks that we think can significantly accelerate the economy. I think that will be one of the defining characteristics of our new model, maybe the defining characteristic. And the fact that we can actually seriously be sitting here 10 years from when we started to the day, talking about a model that can do significant chunks of the knowledge work that the world needs and make things more efficient and faster and better. That is pretty remarkable. So again, lots of good things about the new model, but that will probably be the dominant one.
Very long. I didn't think it'd take this long.
Bob, I just wanted to come back to something as sort of we end here on the cease and desist letter to Alphabet. What are your expectations there in terms of what you may hear back or whether you would undertake litigation to defend your IP?
Well, the ball is in their court, so to speak. We have to see how they react to it. You know, we've engaged with other companies in this regard. Character AI was one, and when we warned them of this, of the concerns that we had about it, they took our IP down. And so we didn't have to go beyond that. We'll see how Google reacts to it.
And finally, Sam, if I could just end with you, you know, we talk about OpenAI so often, but we can never put up a chart. We can never reference a conference call. You're not a public company. But I do wonder, because of how important you are to the overall ecosystem, do you ever think about publicly sharing what your revenue projections are in the way that a public company would at this point, even though I know you're not? Just because it would give us all a guidepost in terms of understanding what's going on.
Why don't you share your profit guidance like the Salvation Army?
I mean, it feels a little strange to do that as a
because you're a non-profit.
I get the reasons, and we're not anywhere close to a decision to do that, but I'm not opposed to it either. I don't know what all of the legal complexities would be there, but I assume we could do it in some way. And I think it might help contextualize why we do some of the things that we do. And, you know, unfortunately, a lot of what we share with investors manages to leak out anyway, so we might.
All right, well, if you choose to, feel free to join us to do it. Yeah, I appreciate it. Bob Iger, Sam Altman, thank you both for taking the time today. Very much appreciate it.
Thanks, David. Thanks, Sam.
I mean, that great discussion. Obviously.
They're all like,
well,
that was awkward. It was a great discussion. All right. Well, yeah, that was your Disney OpenAI. I wanted to listen to that. I just like watching Sam live. You know, I feel like he's gonna crash out one day. We'll see. But that being said, there's a couple of movements. It moved around Google a little bit. Otherwise, same leaders there. A couple of tech names, actually. TXN right now. Zelensky says control over Ukraine's Donbass may be put to a vote. Yeah. So, I think I was going to tell you guys about vitamins. El Coyote had a good question. You asked if I was following the Hugh Hendry thing. I haven't followed in a while. You said he's been talking about the yen and all that. So, I think it's a gray swan. It's not the same black swan anymore. I mean, and the fact that I think the Fed is front running it. Now that you have support from the Treasury, them buying the short end, it's going to help a little bit. But I'm more concerned about how it impacts us. So I don't think standalone, most people are prepared, again, from the last time. It could become an issue, but more so I lean in the camp of I'm only going to care about the Japanese yen if it has the ability to mess with our fixed income and dollar. For right now, it's a gray swan. I'd assume most people are prepared. It just depends on if Japan surprises or not on the 19th. But remember, Japan has already undertook a pretty big step in this whole raising that people thought they couldn't handle. So they're finding out how to do it properly. They're doing it very slow, gradual, and it's so small that it's hard to really get like a black swan reaction. But it will become a black swan if it somehow finds a way to fuck with our bonds and dollar. It'll fuck with the currency for a little bit, but for now, I'm not too worried about it. What trades are we making today? What happened? Dude, what the fuck happened with Powell? So we have a locked-in chat for all the traders. This is a long-term chat. And even then, on both of them, we want real information, real knowledge, real learning, not this foo-foo lame shit of posting plays and pumping on people. Do you understand? So a lot of people, I think we had a lot of people yesterday, so maybe that's where the confusion came from. But would you like to talk about valuations? I was going to talk about vitamins and then valuations. And then long duration, though. That has been something we have been discussing that I think will help you. But anything other than that, it's not really, you got to get it where you fit in. We're making our community not vulnerable to pumpers, and this is how we do it. So thank you for shopping at the Stock Market Live. Oh, you want the vitamins? Okay, I'll give you the vitamins. So let me tell you about somebody, I think Connor said it. So I got those little peptides, and the peptides, I was looking into it, and there's this doctor, and he's right, because I verified it through a bunch of other people. I even asked my mom about it. She knows a little bit about it. So yeah, peptides are solid. Remember we were talking about it the other day? But here's the problem. So like the BPC, if you have like a tumor or a cancer that you don't know about, or even if you have one, it speeds up recovery and it speeds up like your blood vessels and all of that. But the same thing that helps with recovery, if you had like an unknown tumor or even like a benign tumor that's not really doing anything, yeah, it could help grow the tumor as well. So that's the risk. Some of these peptides, a lot of them have like kind of minimal downside, but in this case, you have to like balance it out. If like you want, it's like which one's more important, recovery or the risk of tumor or cancer? Yeah, it can, and it won't, not will, but it's the same effect of it all. So like the fact that it's like the same exact thing that makes your blood grow, the growth hormone. I forgot what, I think it's called like ST-STEC or something. And then like the way it interacts, they even have it in, this is the part that grows the blood vessels and then could lead to tumors. They've studied that. So it's a risk. It's just something that people I haven't heard about it till I finally got the peptide and I started looking into it a little bit more. And then once I saw this, because most of them have very minimal downside. But yeah, that's the big risk. If you have any propensity to that, you might want to stay away from them. So that's the first one. Other than that, I just take a daily vitamin. I take some turmeric. What's the other one? Oh, I got the magnesium. And then I've been taking wormwood for like parasites. I've heard of the parasite cleanse. I wanted to try it. It just makes me poop more. But nothing too crazy. How do you get locked in? I think you just hit upgrade membership. But yeah, it's somewhere there. Oh, and then I've been taking arnica. I found an arnica supplement. Because I used to do like arnica, like topical shit that you like rub on you. But they have like a very, very small dose arnica. That's for inflammation. So there's that. And now valuation. I wanted to look into, where is it? I wanted to look at TAP. Or even Disney. Disney's still at a 16 PE. Let's go through all of those dividend ones. So TAP now, yeah, TAP is at 0.86 book value. That's crazy. Something changed. I know the price wasn't that much, but when we bought it, it was at like, it was about just above half. So yeah, they went up. The yield is now below 4 slightly. And then where's UPS? So UPS still 15 PE. Compared that to FedEx. FedEx is at 16 though. And then remember, that was the thing that blew my mind. What's it called? FedEx is, remember FedEx is like dramatically smaller than UPS. I didn't know that. Arnica, it's actually toxic. So arnica, you have to, if you ingest it, you have to get it in like they have it. They sell it at Sprouts. Sprouts are like it's these little, it's in CKs. But yeah, it's really good for inflammation. Like I used to, after the surgery, I put it my what was it that I had? Hernia. I did like a arnica thing that you rub on your body. But like, yeah, it's really good for inflammation. I go to Sprouts. So I would just order shit off Amazon, and then I keep like watching shit, and then I'll find and I'll like go down these rabbit holes of vitamins, and then you go to Sprouts, they have everything. It's insane. Anything you would buy on like a vitamin place, it's all at Sprouts. It's a little bit more expensive, but it's all on Sprouts. It's kind of crazy. Like you could literally get they have the black seed gummies. They have the lion's mane mushrooms. Anything you've actually ever seen on like a health trend, Sprouts will have it. Even the shit you won't. I got every single thing I've gotten. I got the magnesium, the arnica, the turmeric shit. All of it just from Sprouts. I got the wormwood, and then I got the black clove thing and all that other shit. All from Sprouts. FedEx is only 2 times book value. Let's see. UPS is 5 times book value. And then where's Target? I still think Target's one of the best. Remember the other day, Target was at a 9 PE. Now Target's at 11. That one's only 2.8 book value. I think Target was a great pickup. If you got it in the lower like 80s or whatever, I think you were yielding what, 7%? I think that 84 to 85 was actually fire. Yeah, it's crazy. FedEx is a lot smaller than UPS though. We didn't know that. But what I'd be looking for is, man, if you could get a good value name, stable dividend, low price, ability to stay for 10 years, and then the PE ratio doesn't matter as much, but like a lower PE, the better. I mean, that's kind of been the idea. Any of these plays that were trading at a much lower PE, they've been on fire. That's what I'm saying. If as long as they stick around and don't run into like individual issues, they're gonna be golden. Yeah, bro. Target was just at 9. That's amazing. But yeah, now it's at 11. Who else was another one? I mean, Fizzerv is a damn 10 PE. And Fizzerv's only 1 times over book value, believe it or not. As a growth name, that's kind of crazy. Accelerates with the lipoma. Is that what it is? Mm-hmm. Well, you could try it. I think you're supposed to go and, like, Christina said it. Like, you should go before you take, like, peptides. You should get, like, a body scan and, like, go see your doctor. And then just make sure you don't have any, like, tumors, anything benign. Because then if you do, that could speed it up. And that's, like, what's the risk? Like, what's it worth to you? Would you rather recover faster and get the benefits if it comes at the cost of that? You know, just simple risk to reward. KHC I like. Let me check KHC. So yeah, they're at 0.7 price to book. It doesn't have a PE. Forward PE is 0.9. So I don't know if they reported negative recently. But like my problem with Kraft is that they haven't moved in like 10 years. They don't really move. So it will give you stability. And then what's the dividend yield? The dividend yield is 6.5. So that's pretty good considering this one's still at the bottom. I mean, listen, I wouldn't throw it off. I would consider it, to be honest. The only risk of Kraft is that it's like dead money for the next couple of years. But I like it, honestly. I think Target and some other names. Again, I still think TAP is the number 1 right now. But again, TAP is already starting to climb. But let me see CalMaine too. Because then you could also do Conagra or Pepsi. So Pepsi's back up, unfortunately. Yeah, Pepsi's even at 28 times now too, unfortunately. I think Pepsi's getting out of reach. Hershey's, if that ever comes down, that's even at 27. Yeah, Hershey's actually went crazy. Conagra's right at book value right now, 0.95. Then they're at a 9 PE, and then they're yielding 7.9 still. I don't know. And then again, both of these you have to check their dividend payouts. So let me check Kraft. But Kraft doesn't look bad. I wanted to see CalMaine too. One more, and then I'll go through all these food plays. And then these are all food. You see what I'm saying? So all these like food, consumer food, you just got to factor in where that fits into your portfolio. Oh, dude, CalMaine is 3 times price to earnings. It's a 1.5 book value, so you're a little bit above. And then their dividend yield is around 6. Conagra. Yeah, that's kind of crazy. Hold on, my shit's not loading. Yeah, CalMaine's payout rate. Let me go quarter by quarter. I like NVO and PG, but they're still both like up. So that's what I'm saying. As you know, those were the first ones that I was looking at this year, and then literally all these other new names have emerged. Does that make sense? So it's like, again, Target even went lower. Then TAP I think got slashed 50% in the same time frame. So it's like all these new names have been kind of popping out here. Where's KHC? KHC is at 7%. Their yield is high. I think Campbell's, but I just don't like Campbell's. I don't know why. Did Kraft cut their dividend? I don't see a payout ratio on the last couple ones. Last payout ratio I see on Kraft was 73% in March. So I don't like that. Let's see Conagra. Again, all of these are food. These are like food consumer, not like food restaurants. Because I feel you on McDonald's. Conagra's 79% payout. It was earlier. It was in the 200s. So their payout ratio dropped, and then now it's kind of rising back up. Who is the other one we said? There's Conagra, Calmain, Kraft. That was it. I think Target, man. Now Target's starting to get away. But yeah, Kraft is, out of all of them though, Kraft is still down. It hasn't moved. I think you just need to verify that dividend. You got to go through, if you haven't been following along, you got to like go through all of the, you got to go through the history of this year, find out what's going on with their dividend. Is it at risk? All of that. Because yeah, we're pretty aware of, we weren't worried about Target's dividend. We were more worried about the UPS one. Oh yeah, Kraft is splitting. I forgot about that. So yeah, I remember that. I think they are going to change. The dividend's going to change on that. Yeah, because then I think they're going to split the company and then one part gets the dividend and it'll be lower. MOS, I wouldn't really consider. Because again, think about all these names that we brought up. You have used them. I don't think most of you are purchasing fertilizer, if that makes any sense. Y'all, even Campbell's you've had. Kraft Cheese you've had. Calmain, they supply a lot of the eggs in America. You get what I'm saying? Tap, you all know what Coors Light is. Let's see, what's the other ones? Target, you all know about Target. You know about Hershey's. Yeah, unless you're farming or you have a nursery, then yeah. But for the most part, I'm not really interested in the ones we don't know. Because this is what I'm saying. The ones that have good brand values, stable, as long as they're not overburdened with debt. The only thing, Kraft just doesn't move. That's what I'm saying. It's literally been a value stock for the last like 10 years. Like no exaggeration. And now they're going to split it up. Conagra, Conagra, Spam and shit. So again, these are still at the bottom. They've came up a little bit. Again, Kraft looked a little bit more enticing. You got to look into that split and what's going on. But then, and I like it when that Chad brought up Calmain. I liked it a lot. That one has a high yield. It's still up a lot, but again, the PE isn't even crazy. So again, all you guys notice, all of these are very similar. Again, even like Tap, they're all these like popular consumer names, haven't been too hot. They're all trading either at book value or below, low PE, a fair or a high dividend with, ideally minimal risk of being cut. That's exactly what we're looking for. Those, I think, that offers a different set of value, or you start moving into the Procter & Gamble's, Pepsi. Pepsi was solid at 130 this year. But I think it's a little too high now. Still down on the year, though, if they could turn it around. Who else? Hershey's as well. Hershey's, I didn't realize how much premium Hershey's has. I think Kraft is getting split. So you'll still get the second company, but I think as a result, the dividend's going to drop. Oh, Kimberly-Clark. That was the other one. Kimberly-Clark kind of bounced, though, bro. It's only up $3 from the bottom. All right, let's look at Kimberly. That's diapers and tampons and shit. Kimberly-Clark, 17 PE, 25 times price to book, and then their payout ratio is high. But I don't know. I don't think the dividend was a worry for them, even though their payout ratio is high. Someone said they don't expect it to go down. But then, do you guys know all of these are food related? Most of them. Food or like consumer. Adobe AI Spotlight. And then food. Or then Fiserv. Fiserv just has a low PE, low price to book considering what it is. But this is a gamble. I know about them. Again, like I said, I've interacted with them pretty often. But this is a growth name. There's no dividend. This doesn't benefit off of the other one. Oh, General Mills. As in the General Mills, 8 PE. Price to book is still a little higher. And then dividend 5.2. I don't know. Let's check their See, and you all know General Mills. This one's at the bottom. You're down what? 20, 30% on the year? Payout ratio 46? Habibi. Yeah, that's honestly not too bad. So again, and now notice this too, because if you asked me this a couple weeks ago, Target and UPS were like $10, $20 lower. Are you guys feeling? You know, think about that. So that's some of these, again, just a couple weeks ago, a month ago, they didn't look as attractive. But now keep in mind, these next couple weeks, if all these other ones start to go crazy, then yeah, you're going to, like I said, be familiar with the options. Because then if you don't get one of them, if you miss out on it and then they start, you give up that extra edge that you had, you might want to go to something else. So that's why I remember General Mills, I wasn't too hyped on it last month, 2 months ago. But this is one you'll know for 10 years. And then silver hit a new high. Again, spot silver is in the 60s or something, 63.54. PayPal, I think it's around where we got it. But that's why, I mean, financials, I think I like Fiserv a little bit more than PayPal. I think Fiserv has a better valuation and you have more upside. Unless PayPal gets dramatically cheaper. But then Fiserv could, I don't think Fiserv has the same 10-year ability as PayPal does. Yeah, PayPal's still at a 12 PE. And you're paying a couple times over book. I'm saying Fiserv was at like a 9, 10. Now it's kind of climbing up to 10. But even Fiserv is a low book value, surprisingly. On food stocks, not knowing what RFK is going to do. I don't think you need to. Some of them might go down a little bit more. But that's why I'm saying if you got a stable dividend, no chance of that going away. Some of them have already priced in that effect. That's why I keep saying 10 years, 10 years, 10 years. Because RFK will be gone. Again, that other dude's trying to impeach him. But the whole idea is that kind of some of these fears are already embedded to the stocks right now. But I wouldn't be afraid of that. That's what I'm saying. If some of these are trading at big discounts, you got a payout ratio that's 50 or lower, like General Mills even, I'm not worried about that at all. Pool, I don't like Pool. I don't shop at Leslie Pool Supply. And they're still kind of overvalued, like low key. Or no, I'm thinking Leslie. Which one's Pool? Because I remember one of them got fucked up. Again, gold and silver still. Yeah, waste management. That one's going to be in the category of just like, kind of like a Hershey's or a Pepsi. But great name. That one's not going anywhere. Spot silver rises, fresh record high, 63.59. Get a long term. Bro, I think I'm gonna copy your Issa Colt, bro. Because Issa Colt looks like a real name. People are like, who's Issa Colt? Covington. Yeah, Pool, it's like a pool company, but I'm not too big of a fan. I haven't tried the no artificial Pepsi. I saw that they made didn't they make hot Cheetos that were like clear? It's like hot Cheetos and it tastes like hot Cheetos, but there's just no red 40. I know Costco's came down on the year, but that could kind of be like one of those whirlpools. But I think it'd have to go down a little bit more, to be honest. And I think even then, I think we might get an opportunity for cheap Costco. I mean, they're damn even suing the fucking admin over the tariffs. But yeah, Costco's at 48 times PE. It's actually insane. Because Costco, I think, has a higher PE than fucking Amazon, which is wild. Because Costco does not sell cloud services. That's what I'm saying. Some of these names, they came, like, they're already up a lot. They're just not going anywhere. That's like, even CalMaine kind of reminds me of that. But then again, they're fundamentals on CalMaine. The stock price is high, but it's down on the year, and then they have a lot of good things going for them. It's at least a little bit cheaper in that sense. Yeah, Walmart was down earlier than fucking ripped. So Walmart's already at all-time high, unfortunately. You had a shot, $82 beginning of the year, and that was high. That's kind of how Costco and Waste Management looked, and that's what I'm saying. Some of those could do that, or you'll turn into like another year down. But if you already have, like, if you don't want to go for deeper value and you just need to build around solid quality, then I do think like Pepsi's in play. That one's not too bad. And then who's the other one? Maybe even the Costco, if you insisted. At least, again, you're at least getting it down 15-20% on the year. There's one more. Waste Management. Oh, there's one more. There's a couple of those names, actually. Oh, Procter & Gamble. Duh. Procter & Gamble would fit that criteria as well. So that's what I'm saying. All of these, though, just get familiar with all these names, because when it's all said and done, I mean, these next couple months are going to really see how they all start to play out. I'm looking up 100-ounce silver bars on eBay. Weren't you able to see sold listings on eBay? How do you see the sold listings? I want to see what they're going for on eBay. Roblox lawsuit. FLA attorney James Uthamer sues Roblox for misrepresenting platform safety. Bottom left side. Oh, sold items. Nice. Holy fuck. Dude! So I don't know. Remember, we had to play all this other stuff, but yeah, bro. People have bought these for $6,200. That's insane. 64. So this sold December. I'm looking at the bars. Royal Canadian. I have one of these. And then I have a JM Bullion. But yeah, so 6,200. Who the fuck is buying the weed glow-in-the-dark cannabis silver for 125? What the fuck, man? Oh yeah, thud up. That looks old as shit. Natural toning. So I get, that's what I'm saying. You got to pay a fee on eBay, but at the very least, if you guys are really not, what the fuck is this? Sexy hot Illinois Troy ounce. Who buys this shit, dude? What the fuck? eBay. Yeah, bro. Who's buying this stuff? Someone bought 100 ounces for $5,900 yesterday. Vintage Johnson Matthey. Is mine considered vintage now? What? Bro, is mine considered vintage? Because this is the one I have. Since when did this become vintage? Oh, man. The Engelhard is the best. Damn, bro. So my silver is becoming vintage. Bro, who's buying these? Every like 10 listings, someone just bought a sexy Tinkerbell. Pure silver. Dude, who's buying these? Dog, that means there is people out there and they're like, I need to buy some silver right now. And then they are opting for the silver with sexy images on them of Tinkerbell. That one I can't wrap my head around. Damn, somebody bought 5 100-ounce bars for $32,000. That's still, I guess they saved $200 an ounce? Or $200 every 100 ounces? I'm telling you, go look at every 5 listings somebody is buying. Hold on, I'm clicking on one of these. How is this even a market, bro? It's amazing. You listened and you went there. Yeah, just that's what I'm saying. I don't know. I think you wanted to bring the gambles back, but you know, I'll take a look at the one you sent. But I mean, if you're buying fucking Rigetti in your long term, I still think you're missing it, dude. Which is good. I'm glad you had the other ones. And like I said, you know, other homie, he sent me some bubble shit, and you know, you guys know I disapprove of it. I just think you got to really separate it, just how we separated the chats. You know, if you really want to trade and be involved in that, go join the locked in, but you should separate it, because that's what I'm saying. If you're throwing Rigetti, Qubits, all these names, like imagine the conversation we just had. I'm even telling people with fertilizer. I'm like, you don't even use fertilizer. Why would you own that for 10 years minimum? So that's kind of why we've made some of these changes, because I think a lot of people, before you know it, it's very easy and emotional in the stock market. It's very easy to start mixing dog shit in there. And, you know, it may work for a little, but after that, it may, it may work for a couple years even, but that's usually where it backfires heavy. And we have seen that. Unfortunately. So yeah, you gotta, I wouldn't tell you to sell anything now, but like I'm saying, if we went into this year and you guys started putting like crazy hype plays, like again, like critical minerals, I played all of them. We literally made a fortune trading them. It's kind of crazy. Again, silver, gold, made a fortune. All of these there was awesome plays. There was dog shit, but they never had a shot of entering the long term. You guys understand? It's just pure, that's the discipline, is to separate it. That's why, you know, some of these changes this year, we had to separate it all. So I'm saying, whether it's a watch list or news in the morning, the sad reality, that's only for trading. That's where the info, the news plays. But Sentinel 1, see, speak of the devil. Yo, Sentinel, Hi! Oh, there's only one cheap one. Oh, it's only 1.5. I think I kind of overpaid on there, but yeah, that's only 1.5%. It looked way bigger. Why did that look so big? Interesting. Hold on, keep your eyes on that one. But see, that's what I'm saying. These are gambles. I wouldn't throw these in the long term. But that's like, I think if I keep exposing it to people, I don't want that to end up happening. NVIDIA tweet, RR is ready for the factory floor. They didn't move on that. It's very easy to separate them, bro. I've seen people do that a lot. That's just the sad, like, reality and temptation of it. I've literally watched people go and, before you know it, and then if you hear me and you're like, damn, he's hitting these. He's going, and again, you could ask these guys. I haven't been sharing strike prices. I'm not trying to pump plays. I told you, I could turn off my shit and I could make way more money without ever talking to anybody. You know, a lot of people want to say it's this and that. It's like, I don't want you guys to get influenced on it. But then what would happen, and then if you get in the gambling mentality, your algo starts showing you a bunch of dog shit here and there. Before you know it, bro, people start picking up some bad shit. And then if your long terms aren't separated, and then you've already bought a couple and maybe one of them works, I mean, have you ever seen, here, this is what I'm talking about. Do you know what this means? Let me show you. Let me see, I need to find it. Do you know what this means? I don't know what happened with Sentinel. It looked good for a little bit, but that's what I'm saying. Be careful. Federal Reserve announces termination of credit. Sentinel 1. I see insiders sold shares. I'm out at 100%. Oh, I didn't fill all of them. But yeah, those already went up 100%. I don't know. It could be post earnings, or maybe they're at a conference. So do you know what this is? Visa's going up too. Have you guys haven't seen this meme? It's only a matter of time. Citron Research was Sentinel 1. Tell me why he ain't nothing but a heartache. Tell me why I never wanna hear you say. Oh, come on. All right, I got rid of more of them at 100. I had to just lower it by 1 cent. All right, I'm out of that. That was 100% real quick. Doesn't mean you put it in the long term. So yeah, 32 target is simple. You get 9.5. That one just had such little time. That's why I got rid of them. Well, yeah, that hit. At least we get one today. Just a matter of time. And that's what I'm saying. If you play with the long term, and then before you know it, you got one, you start buying one thing, think about it. Our long terms right now has the smallest account. You could have saved up for 5 years, made gains. You would have 30 fucking grand in there. And then you start dabbling, bro. Even if a couple of these plays work, what's going to happen? It's only a matter of time, brother. And then what's eventually going to happen? You're going to slip on one of them. So that's why I know you guys want the plays, and I know we got good plays, but I care more about hurting people. And that's what I'm saying. It's something, if you want to trade options, you want to be in the gambling mode, you should know exactly what it is, and it's going to be separate from the long term. And that's what I'm saying. At some point, if you think you're getting left out, you're not. I'm saving you. You have no idea. Because if the trading isn't serving you to the point where, again, I think $50 a month, we're talking $2 a day at max. And if that's not producing for you, you don't have to pay. I'll still give you all the info. I have not hidden any long term from anybody. And even a lot of the trading ideas, I've shared all of the info. You guys could ask the locked in guys. I'm telling everybody everything. That's it. There's certain plays that I'm just being I'm not being as direct with everybody because I don't want you guys to gamble unless you know you're fucking gambling. But yeah, and that's what I'm saying. Like, most of the people who have asked me to bring back the plays, send me a long term. Let me see. If you want me to bring it back, send me your long term and let me look. I had another one. I had nobody. They said, and again, you said unban me. And bro, you guys, I love you. I mean this in you guys are giving me fatherly disappointment. Does that make sense? I think I deleted it. Fatherly disappointment. You want to know why? He said, Josh, I have a long term. When did I tell you to buy biotechs? Why are you buying SPACs? Why are you buying crypto treasury stocks? MSTR, I hope you speculated. If you bought it in 2023 with zero, my goodness, I hope you did good. Why are you buying BBAI? And look, there's crypto in your long term too, mother. Do you see what I'm saying? So this person, you broke other rules, so I'm not unbanning. I haven't unbanned anybody yet. We're going to go on a case-by-case basis, but like I'm telling you, the people who want me to change stuff, send me your long term. Send me your long term if you want to get unbanned. If you want me to go back and post in all the plays, send me your long term and show me, and I will consider it. But here's the reality. Anybody who's reached out to me for it and complained, I'm like, dude, you guys it's going to hurt you. You know why? Because clearly it already has. I don't like this. Again, I have multiple long terms, all-time highs. The trades are doing great, but I'm thinking about you, brother, because I'm not trying to let that shit hurt you and give you an opportunity to slip and fall. When right now we should all be securing something good, and everybody can. Whether you have a lot of money or a little amount of money, we could kill it, and you should be able to kill it. But I don't want all of this content. If there's too much noise where you're missing out on the rules that are clearly outlined, if you're not clearly if you're finding an opportunity, like, oh well, Josh is trading. I think I traded one of those quantum plays, because again, I was telling you guys quantum in December of 2024, and I told you that would be the next bubble. I was trading it, I was playing it, but then some of y'all are making the mistake of listening to other dog shit, and then before you know it, you're like, yeah, he played it. Oh, okay, this is long term now. Let me hold this for 10 years. That's not what I'm doing. And and again, that's why I like to think the people who are in the locked in, I think they're very well aware. I think all of it's dog shit. I've said that even in the bubble video when we bought TAP in the other one. I am aware these are dog shit. That's why I'm speculating on them. But again, I'm using a very strict balance, and we are so early with our information. A small amount of money is giving us a multiplier. But at the same time, do you see the issue? I hope you guys are seeing it. Like I'm saying, I've seen every time. Send me your long term if you want free plays. Send me it. Because I'm going to tell you right now, I guarantee you the free plays have confused you into not getting a long term, or you have put dog shit in the long term. And it's okay to trade dog shit, but trade it, not long term, and don't confuse yourself. Huh? Bradley Frizzle in the peach. Oh, no. We wish you a Merry Peachmas. We wish you a Merry Peachmas. We wish you a Merry Peachmas and a happy Bradley Frizzle. The Peach Nation's here and it happens each year. Each day of consistency, Boeing is near. Oh, God bless y'all. Robots and space are the next bubble. So Mitchell, send me your long term. Let me look at your long term. I want to see where your focus is at. Email tradingfraternity@gmail.com. But do you guys not see the issue? If you're focused on the next bubble and not focusing on the long term, you are going to get destroyed by the bubble. If you focus on the long term, you are going to walk away richer. You're going to walk away better, and then you're going to understand how to effectively position on these bubbles, and you're not going to care about them because you're not going to rely on it. Do you guys see the difference? All I'm encouraging you to do is do this the right way, stay in bounds, and have the right focus. That's how you do it. Because the guys who are focusing on the long term, they're hitting the bubble. But if you're only focusing on the other one, then yeah, that's our problem. There you go. Someone sent me he said, can I have stream alerts? Send me your trading account. You sent me the long term, but that's good. At least you have the fucking long term. That's what I'm talking about. But yeah, I finally got a good one. Uber, TSM, Solventum. He has Pfizer, Nvidia. But when did you make this? That's a good one, Keith. I like it. See, that's what I'm down with. A good long-term Microsoft, Nvidia. The BLS PPI to be released on January 30th for December. The SpaceX, that's only moves sats. I love a good long term, amen. But that's what I'm saying. I think you're gonna do good at trading if you prioritize. But the risk is not listening and letting, before you know it, you start going the other way. It's not much, but here's my long term. I like it. You're right. It's not much, but it's still a good start. But that's what I'm saying. Your priority should be that long term until it grows, and you should put a way smaller in trading. And if you do that, you're gonna watch the opportunities just land at your feet. But then if you're like, oh, my long term's small, let me try to trade and then we'll do the long term, you're gonna end up having a very the stock market will feel like food poisoning. So it's like, that's all it is. And that's what I'm saying. Part of the reason we've done a lot of this is to make sure there is no confusion. I'm saying the videos, what we're doing, we are limiting the amount of confusion to try to justify some of these, misprioritizing bad behavior. But then too, it's like, again, if you've listened to me for a long time, like, why are you guys winding up with dog shit in the portfolio? You know what I'm saying? Like, again, the amount of people I've seen this year add quantum to their long term, it's just odd because you guys don't use quantum. So maybe if you were developing AI models, I'd have more sympathy for it. But it's just like, you're not making that, dude. It just trade it. If you traded it in December 2024, you could have bought any option, made them free, did whatever you want. I'm totally chill with that. I've always been chill with that. But, you know, playing this game of like, let me mix in my trading and my long term and then let me hold and do that, it goes crazy. Okay, so someone sent me another one. It's small. But yeah, like some of you guys, you got BBAI. I don't know why you have that. Again, QuantumScape, Rivian. Rivian maybe if you drive a Rivian. But that's all. You just got to focus on the quality ones, and anything that's like low quality, you know, you just got to start focusing on buying the other one. And then don't buy shit high too, like Intel. We bought Intel a lot cheaper. That's another thing I tell you guys. That's another thing of confusion that I don't want people to do. One of the rules that we've kind of outlined, do not buy any long-term play that I'm up on. You see what I'm saying? I'm not trying to pump on you. We're not trying to make, you know, that's not how this game is going to work. You're going to make good plays and get a good long-term by buying at a low price. That's why we're doing such a strict discipline in terms of finding names that are not already up on the year. We want that edge. I want you to have the edge, because if you get the edge and do it good, you're going to perform very well. But I wouldn't, you know, you don't want to buy, like Intel is not on our list anymore. You know, it's too high. So even if it's a small amount, what you got to focus on is high quality. And then if you if you send me a $3,000 long term, you shouldn't be trading with more than $300. And if you could save $300 a month, the way to be safe, you shouldn't be trading with more than $30 a month. I know, doesn't that sound ridiculously low? It does. But if you could hold that discipline for about 6 months to a year, you're going to have a really good time. And guess what? Your money's going to compound. And then you're going to walk into next year with another $3,000 minimum without any chance of losing all your money. You hit one big play with the $30, you're going to be shocked what options could do. And then you're going to come in a lot more stable and you're going to be a lot more secure, and then being able to take advantage of every opportunity. Does that make sense? That is what we have been trying to explain this year. Maybe I'll make another recap video of this strategy. But you will not lose doing that. You may lose a play, but you will not. You may lose the battle, but you will not lose the war. You will walk away with the long term. If you follow the long-term rules, not buying high, you're going to be fine. You'll have exposure to bubbles and upside and everything else. And then it's not going to backfire. Even if you missed every short-term play, you're still walking away with 90% of your savings. That means you're still walking away with what? $270 every deposit. And then if that doubles up, you actually ended up making more money. That's it. You go 1 for 12 on one of those option plays, and then they hit 500 at 1,000, then your money's back there. See, and then if you're able to actually do it with discipline, and we get better, and then you're understanding how it works, and then you're not, and then once you gamble on the shitty stuff with the small amount and you see how shitty it is, you're not going to fall for the trap of putting dog shit in your long term, and then you get more quality. But that, I'm telling you, that's how it works. If you could, it sucks. It's small, it's slow, but only for a little bit. That's the thing. It's only small and slow for a little bit. But guess what? Choose your pain. You either choose the pain in the cage of going small now and keeping it small and having this discipline now, and it's going to feel like you're missing out and everything else. But down the line, you already put your payment down. You're not gonna pay with the blown up account. You're not gonna pay with missing out in the long run, and then you're gonna actually get experience. Or you could ignore it. Don't have the pain now. Go big, go fast today. Maybe you'll make a bag. Maybe it'll double up, triple up. Maybe you hit 1,000x the first time. But then the white rabbit, the clock is ticking. You're gonna have to make the payment eventually, and you're either gonna pay with destroying your long term, or you're going to pay with giving up all of that money and being like, well, I just wasted X amount of time and I lost it all on one. And then I didn't develop any budgeting skills. I didn't develop any other skills in trading and how to do it. So that's how it is, man. If you guys can follow along, you're gonna be fine. Okay, I see one. It's small, but again, I see, yeah, you're building the long term, but please, like gold, I'm not a fan of GLD in the long term. I think, well, physical gold. Like I said the other day, you should gamble on gold if you really wanted to, but that's not going to be holding the long term. That's going to be speculating. If you have options in your long term, that's a mistake. So, like I'm saying, I don't want you all to be exposed to options if we keep putting them in the long term. Oh, that's a good one. I like yours, Sergio. This one's beautiful, actually. I like it. Vu, Maine. This one's not bad. Pepsi, oh. Yeah, yours isn't bad, Xavier. I like. Again, see another one. So, Anthony, I see rich robotics in your long term. I see ABAT in your long term. Have you ever used the rich robotics before? I see a Schwab dividend equity ETF. Yeah. Oh, that was your surges? Of course you're in the locked in. Yeah, I like that. That was a beautiful long term. That makes sense. Oh, there you go. David, the teacher's baby. Yeah, bro. Yeah, you don't, that's what I'm saying. Y'all don't need the locked in. And especially you don't need to pay for it, because like if you're not trading, you guys have not been, you guys are not missing out anything. You guys realize that, right? So if you're like, Josh, I can't afford the locked in, I don't even have time to day trade, you understand whether there's a delay or a locked in, nothing has been taken away from you guys. You get all the long-term plays. I will gladly, you could come to this chat and we could have long-term analysis whenever you want. And I see it. Some of you guys got very, very good ones. So thank you. I like it. There's no dog shit in here. You got intel at the right fucking time. Ah, wait a minute. Is that dividend? Oh, that's earnings. I said, why do I see a date in here? Yeah, I love it, man. Well, that's what I'm saying. It's not, that's the whole idea here. Most of the people making the most noise about it, they don't have long terms, and then they're like, give me a trade, Josh, or I fucking hate you. Josh, why do you hate poor people, Josh? Josh, I thought you believed in Jesus. Why won't you give me a gamble, Josh? I'm like, what? So yeah, the gamblers, unfortunately, much more is expected of you. And then homeboy who sent me the $500,000 account, that looks good, but the problem, like, why is SCWO in there? That's not a long-term play. Everything else looks pretty much good. But you just have a lot of plays in there. Yeah, that's your only one that looks weird. 100%. So just be careful. Don't mix those in. As long as that's where you're gonna risk a lot if you do. Even if it's smaller, that's what I'm saying here. We need a strict discipline. Do not be putting any dog shit plays, any gambling plays. They do not belong in your long term. You have to have a separate account for them. Gambling has only hurt me. But listen, man, that long term looks good though. You're building stuff up, and I don't see shit. Now you just got to get more quality. Because so a lot of the stuff you have, you got the ones that I got, but I think your best quality in that portfolio is Pepsi, which is good. But we need to start for some of y'all. We need to now, if you're rebuilding, because again, I'm buying some values. We got to get you, like, I'm glad you got Intel if you got it at the right time. And MO is good too now, but we need to get you guys like a high quality, like, again, Pepsi. The ones that we were talking about today, like the Pepsi's, Walmart, Waste Management, those are the ones we need to get you on that sense. Yeah, yours is good too, Corey. Yeah, so amen. So I'm saying, those of y'all, if you aren't trading, bro, you are good to go. That's what I'm saying. You guys, I'm gonna keep getting you your long-term shit. You guys aren't missing out on anything, and thank you for don't put dog shit in there. Some of you, there's one Jingleheimer. You have a lot of the dividend stocks or you got a lot of these ETFs. I just wouldn't rely on those, but that's not bad. Not bad at all. Again, you're good. Can I unban you? I said Josh loves Weeble. You said you eat Weeble for breakfast. Well, I think you knew I would ban you. I'll unban you if you don't have any dog shit in your long term. You have core weave, but you got it low. You got good Estee Lauder. Oh, you a Iron Mountain Chad, huh? You got IRM. All right, send me a link to your YouTube. Like, how does it look? I'm gonna use Elliot. Just you're the first name I saw, Elliot. So I'm gonna use your channel. I do. You guys know I got like 100 of these, so I'm just going through. I'm seeing, but then do you guys not notice this though so far? Yeah, I wouldn't have unbanned. If you had any of that fucking dog shit in your portfolio, bro, I wouldn't have unbanned you. Because again, what benefit would it have been if you're not really listening? But that's good to see. A good long term, bro. You're actually using it. A mistake is a mistake. I will forgive you. But a continued, a continued disruption in the chat, and then not really even having a long term, not following easy rules that will make you money, that we're not going to vibe with. And that's what I'm saying, bro. Most of y'all, again, y'all have no complaints because you're doing good. So why is WWR in there? ASST, these aren't long term. LAC, SCWO, you guys made a mistake. So that's what I'm saying, that I think that's exactly what I was talking about before, where these were all plays we killed it on. But guess what? I bought in and I sold out. We make a fuck ton of money and then leave. None of these aren't long-term plays. You can make them free and hold them if you bought shares, but even then, that should be in a separate account. And then if you're telling me they're long-term, that means you are trading in your long-term. That's going to hurt you. That's what I'm trying to explain here. That's where it starts to backfire a lot more. Okay. Intel, Bebzy. So yeah, you have man. You got GameStop and GameStop warrants in your long term. So that honestly, the other ones were chill. But yeah, that's what I'm saying. I think some of those plays, you guys, if it's like speculative, you need to have a separate account to trade them. These aren't going to be in your account that just goes straight up. Baxter, Conagra. He got Conagra. This one's good. You just have a lot of names, Matt, but it's a nice portfolio. No options in it. I like it. That's it. You should work on stacking some up. That's going to be your only thing. You're like that one I looked at yesterday where he had all of the names. So again, I see one with Eddie Toss. Again, and then WWR, LAC. That's what I'm saying. You guys make the same mistake. I've noticed that. It's like, once I see, you guys don't notice that? It's never just one. So once you put one dog shit in your long term, you're going to put like 5 more in there. Does that make sense? You never stop. That's the problem. So I like your portfolio. I see one, but like, that's what I'm saying. You don't want a biotech unless it's like a AbbVie, like a big boy with approved shit. You know what I'm saying? You don't want to put that in there. And then too, like these plays that we hit, the WR, LAC, you might have got them free too. Again, we made them free at great prices, but at the same time, that should be in a separate account, you guys, because otherwise it's just not the same. No, it's a solid one. I like yours, Mr. Chaparian. Yeah, you did mix in Vanny. So that's it. You just got to avoid that. It's a lot smaller, though, compared to what you have. But yeah, just unacceptable. Everything else is acceptable. That's it, you guys. That's what I'm trying to say here. And I think most of the people who have got you get it. There's only been, I think, one guy got banned for a joke. If you've been banned, post your channel in there and I'll look. But like I'm saying, if you don't have a long term, or if all I see is trading and gambling, misapplication of the rules, why do you want to get banned or unbanned? It's not even like this is helping you. It's like, we need to see the real shit, bro. And I'll answer some of your guys' questions in the chat. So we'll see. You want to cleanse your portfolio? So you want to break another rule because we broke the other rule? You see what I'm saying, bro? So unfortunately, that's what I'm saying. I can't fix it after it starts. You just got to just start operating how you should from here on out. That's always what I tell everybody. So it's funny because a lot of y'all, you might think I'm talking about you too, but I see a lot of you have made the same mistake. I.e., a lot of you bought WWR for the long term. I don't know why. Again, that was a great play when we hit it, but it wasn't, again, that was just playing. Again, we did it early. We did it at the right time. But that wasn't there. Rivian chip news. Let's show up on here. Rivian announcing autonomy chip. Ba-da-ba-ba-bop. I'm in a cult. Hey. Happy Honda days. Rivian.com. Oh, wait, it didn't fill me on all of them. Oh, shit, it's gonna hit. It's gonna hit. Yeah, they didn't fill me on all of them. Not a recommendation. Keep it small. No, there wasn't a split. Was there? I think it just bounced. I mean, it's been, remember, it was like 9 or 12? But yeah, no split, none of that. But yeah, like, again, a lot of y'all. So again, if it may be your portfolio, I'll say your name if anything. But yeah, I think a lot of you, ended up buying just either random biotechs that we talked about, or random like minerals plays. You guys started throwing them in your long term. That is unacceptable. Are we all clear with that? Because that is the problem. And then too, I see one option. I see a ASX December call. What the fuck? That's not a long term if you throw an option in there. And then again, if the account is smaller, it shouldn't be there. No, you could put NVO in the long term. That's why, you know why? Because Ozempic sells billions of dollars a year. That's why I said, like a Abivi, a Botox, a Gilead, all like those are like a well-established biotech. I am fine with that. But like Editas, a experimental drug, something that's like phase 2, phase 3, no pipeline, no sales, no fucking commercials, no lobbying. I don't think you should. That's not really long-term shit. So anything else, if it's a Pfizer, I'm more than happy with that. Laser Rivian to add LiDAR to future R2. You like the potential growth of a cobalt mine for robotics? I understand that, but you should gamble on that. I wouldn't put it in your long term until you start getting involved in that in real life. Does that make sense? Because that's how you're going to... Again, we made a fortune off of fucking Uber. We've all used an Uber. You get what I'm saying? The stuff that you don't have to be the next Warren Buffett. You don't have to find the next greatest thing and find it when nobody... it's going to... Like, again, that's why I'm saying don't buy these critical minerals for the long term. You gamble on them. You speculate on them. Put them in another account. You could go get a longer term contract. Not a long-term contract. You could go get a 1 year, 2 year, do whatever you want. Play the wave, play the future value, go ahead. But none of you are working in a fucking cobalt mine unless you're 5 years old and live in a foreign nation where they don't have labor laws. It's sad, I know. So do you not get it? You just gotta go with what you're actually using, involved with, and will be here for 10 years. Not the stuff that the next best thing was always stuff that we knew about and used, and everybody would. They were already making billions of dollars already. So if you want to play those, I'm not telling you can't. I'm not telling you that your information and you looking ahead to the future, it's valuable, but you got to put that value in the right place. You got to make sure you protect your future investments and stability with the long term, and then you go speculate on those in a separate account. That's all you got to do. All right, man. No more emails, bro. I'm getting overwhelmed. I already went through like 50 of these. I still have like another 50 more. But I need to go pee now. So we'll take a break. God bless America. And then we'll continue this. But are you getting this though? Is this making sense? Like, are you starting to understand? And that's why I'm saying some of y'all, just for real, man, I cut out the trading for some of y'all for a reason, because clearly there's these opportunities to not really understand it. And it's not like, again, if you're only doing long term, you have not missed out on anything, and you are getting the full stock market live service you have always enjoyed. But some of y'all, we need to gift y'all a fucking intervention, because this is not going to help your future if you're just throwing options in a long term and prioritizing gambling and these short-term plays and options, because it's just not going to help you. And like I'm saying, it's the one mistake leads to the other. When you play this, it's emotional, and it's just like, I don't know why you want to listen to, you're like, I need this, Josh, give me this, but it's like, you're not really listening to what I told you. Because if you listen to what I told you, I'm going to make you some fucking money. it's going to help you. You're going to walk away wiser, stronger, richer, you name it. So that's all. I think, like I said, if you want to get unbanned, send me your long term. Send me your short term. Let me look at it and see. And we could easily tell what you're getting out of this. And that's what I'm saying. Most of the people who sent me the long term, bro, they weren't banned, and they're just like, thank you. They're like, I'm not trading. But, and then again, it's quality. It's not. And that's what I'm saying. Even for some of those, I could tell you and call out what's not good. But yeah, that's it. You're good. No, I used your channel name. I didn't clap you. I sent your channel link in an email. I unbanned one of the guys. Because, yeah, I banned him for his bad joke. But he had a good long term. He listened. There wasn't dog shit in there. That's what I like to see. All right, I need to go pee, though. Burp.
But something would be wrong for Apple, NVIDIA, Google, those names to no longer be 6, 7, 8% of the S&P 500 index. The reason that run-up looked so crazy up and to the right in the Mag 7 we just looked at is because of those names having such a heavy weighting. So in order for the equal weight to take effect, something has to go meaningfully wrong where all of those names are coming down.
I don't think
you
that's
think they're going to gap up that hard?
I think it's more of a jockeying, like which one is in favor at that point. And what we always try to do is look for what's out of favor. I mean, it got us to buy Apple this summer. It's got us to buy Microsoft last October.
Still Mag 7.
And Mag 7. And it's just how you're picking those. But half of our portfolio, more than half of our portfolio, are other names outside of that.
Financials were a home run this year. Didn't require a problem in the Mag 7.
But look at right now, you may start to see the Mag 7 start to fall out of love a little bit over the next couple of months. I'm extremely bullish in through April, and I think there's going to be a moment where you get the small caps, you get the other sectors leading here for maybe the next month or two, and then there's going to be a moment where those Mag 7 step back in, and maybe they lead from February to March.
Maybe tonight is a good tell on that. AI is going to get another test from Oracle to Broadcom. Reports after the bell. You own that stock? Been a horse. This thing has been a horse. Look at the chart, 73% year to date. This might answer or help answer the question that you just posed.
Yeah, free cash flow juggernaut. They don't have the same CapEx cycle that you're seeing in some of the other names like in Oracle. I think we could get a really solid report. And the market, well, at least the tech side of it, the Mag 7, they need to see that come out through today. And I think you're going to see the response. I think it's going to be a very solid report. It may not be the beat that we typically get and the stock responds up 10%. I think a good, solid beat today, and we see Broadcom up 1, 2, 3% tomorrow in a very stable manner is exactly what this market needs.
Like, don't tell me that Broadcom's going to do something great tonight and then you're not going to see follow through from the Mag 7s. Or not all of them necessarily, because we've made the case too of the dispersion within the group. But we'll have to wait and see. Now, a stock that has not been a horse. It's been a horse's.
What a segue.
But it's turning around.
You should have gone for it.
It's turning around.
It is cable, but sometimes you leave things to the imagination and everybody knows what you mean anyway.
Another great report.
Another great
report.
What stock are you talking about?
Adobe. If this stock had a different ticker symbol, any other ticker symbol under the sun, it'd be up 8% today.
You have no idea how much of a win this is. I'm not being sarcastic in the slightest bit. Up 1.5%. I mean, Josh, go look back, and I know. Thank you for joining. I'm sure you're the reason it's green today, because the last 8 quarters it has produced stellar reports and the stock has gone down, in some cases double digits as a percentage. Look, this is a stock that continues to outperform at the operational level, and the stock is now just starting to realize that.
Shrinking the float like crazy too.
Thank you very much.
Yep.
I mean, it's a cheap stock.
You bought more of it. Let's not bury the lead here. You bought more of it today, right?
I did buy more in my personal account where I could just quickly do it. We may add to clients a little later on today or tomorrow, but I'm a very big believer that this stock has been unfairly tarnished for a couple of years now on the premise that AI is going to eat its lunch. Well, it's been 3 years now that the stock has been outperforming in that context, and the analyst community is now coming around to, hey, this stock is not going away.
You know, it's so funny, like Morgan Stanley has it as an equal weight. It's same thing, like, oh, it's a good quarter, but we don't have the conviction yet to, I guess, raise the outlook. So they cut their price target to 425. every shareholder in this name would love to have 425.
Gosh.
You could hold the upgrade. We don't need the upgrade. 425 would be just fine. I'm not going to stay in this as long as you. I bought it on the technical.
See, they all flipping and all doing that. But I like it, man. I'm very impressed with y'all. You know that? And that's what I'm saying, bro. The people complaining, Josh, you changed, all that. They're fucking degenerate gamblers. They make the most noise. And that's what I'm saying, man. You guys got to realize there's so many people in America who have no idea how to handle the stock market. And they have money and they don't know what to do. And then you turn on the TV, everyone's telling you to gamble. These guys are telling you, buy it, sell it, buy it, sell it. But like, imagine that we have data for half a decade, a little longer. My other portfolios span almost 20 years. And it's just like, bro, we have shit where we could confidently say, this is how you're going to grow your money. The right way, the quality way, and you're not going to miss out no matter what the fuck happens. And especially if the world gets crazy, you're going to be a part of it and you're going to benefit off of it. But you got to do it the right way. And that's why I'm saying the influence. I don't want this dumb shit influencing this back and forth. And like I'm saying, look at what I'm realizing my influence, because even then I'm seeing plays that we gambled on. And again, I'm trying to make it clear that we're gambling on them and that they're not long-term. I remember reminding y'all a couple times, but even then, you still see how it could wind up in the long-term. And that's what you guys got to realize. These guys, these companies, these scammers, they want you to buy this shit. It's like, nah, we could make money on the opportunity. We know how people are going to behave. We're early on the information. You do it the right way with the speculate. It's going to be so much smaller. It's going to be separate from your account that should be growing. SPY's hitting a hot. Bro, are we about to break the Thursday trend? You still need the NASDAQ to go up, but damn. Well, I'm going to still keep going through these. I have a bunch. We started a couple months ago. So like BBAI, I don't know. A lot of you have the BBAI for some reason. So you see what and I think that's hype. And then like Blue Owl Corporation, isn't that like a crypto SPAC? I don't think those should be in your guys' long term. I'm sorry. I know you may not like it, and you're gonna think that a lot of people, maybe they will go, but like think about it. You guys know we had Palantir at $10, and that was just the IPO. If I sold it for a tax loss, some of you ended up keeping that, and that could have been a long term, or you put it in a separate account. Play it with shares. If it hits, you could hold it forever. But you need to have a discipline where you separate, hold for 10 years minimum, everything else, do whatever the fuck you want with it. You get what I'm saying? That's it. That's what we got to work on. And if you are starting a long term right now, you need to focus on quality. You need to focus on the names that are going to be good and that you're going to really hold. That's not bad. Some of you got the ETFs. I'm not the biggest fan of them, but you could still work them. Like someone has the Round Hill Magnificent 7. Just make sure you're really familiar with them. But as you move forward, I would start looking into, unless you don't have the time, unless you really have no time to manage it, and then you have money that's not being put to work, feel free to go buy an ETF. But I would be a little cautious towards the dividend ETFs. Because like I'm telling you, we are trying to, we're trying to grow equity. We're trying to grow our money, right? And make sure it stays there. That's the purpose of the long term. Anytime you get something offering a yield, it puts at risk your equity. So that's why I'm saying these like dividend again, you guys, we talked about it earlier. Like, I think like a SCHD, you're going to have a little bit better of a time. But even then, like, look how it's kind of played out this year. Right? But then like you do a SCHD, what are you going to do next? I already know, dog. You don't know what you're going to do next? I know what you're going to do next. So then you like, oh, what about JEPI? What about SCHD, right? You're going to do that. You're going to hold it for a couple months and you're like, wow, yeah. And then what are you going to do? Yep. You're going to buy a yield max next. Dude, it's fucking crazy. That's why I'm telling y'all, bro. To a certain degree, I could predict the future. That's what my data has provided. because it never stops at one. That's what I'm saying. You buy a biotech, you're going to buy another biotech in the long term. You buy one critical mineral, one dog shit, one BBAI, you're going to buy another 2 or 3 of them in the long term. You buy a dividend ETF, you're one step away from a yield max. That's probably going to happen next. So it's shit like that where that's why I'm saying I just would be careful with it and just, and you know, you don't have to listen to me saying buy this, don't buy that. What you have to listen to is the wisdom, because this came before me. You see what I'm saying? This came before me. The wisdom is anytime somebody offers you money to hold, you're inherently putting up your equity for risk. Simple as that. I'll give you 10%, you give me $100 a year. I'll give you 10% back return. That's saying something. That's the wisdom. You could know what people are saying by what they offer. So it's just like that. Yeah, you're going to buy the MSTYs and all those next. Oh, I like that. You went to the ETF and bought Merck and Pepsi. I really like that. That's a great idea. Oh, hold on. My girl dropped off this fucking dog. And he's going cuckoo for Cocoa Puffs. For long-term puffs.
Jennifer Ree, great to see you and welcome back to Balance of Power. You must be working overtime right now. Which one of these would be most likely to withstand the pressures of the FTC here in Washington?
Well, first, thanks for having me. I very much think that the deal with the easier path would be a Paramount deal, but that's not to say it doesn't have antitrust problems of its own. But I do believe that the issues that arise with a Netflix Warner Brothers combination would be worse from an antitrust perspective than a Paramount situation. And the interesting thing about the comments of President Trump that you just played is that when I did the analysis originally, it occurred to me that Paramount, if it bought Warner Brothers, might have to sell CNN because of the antitrust issues that arise by virtue of combining CBS News and CNN. So it might have had to have been part of the concessions in order to get that deal cleared.
You know, the president was speaking about this earlier in the week and said that he will play a big role in not only what he said yesterday about CNN, but in choosing who actually ends up buying Warner Brothers. He was dinging Paramount for watching 60 Minutes the other night. He didn't like the way that went with Marjorie Taylor Greene. And, you know, he's got, I guess, some issues with the Netflix deal.
Yes.
Does he actually know what he wants to do, and to what extent will he be involved in this?
It's a gateway to non-quality.
To what extent is he allowed?
Amen, man. Amen. All right. And then, okay, if you're gonna hold shit in one account and you don't want to trigger the tax event for the home and you're gonna wait, that's wise. I agree with that. That's what I showed you guys this year. But at the same time, stop adding to that account. Just go make another account. Do you get what I'm saying? Stop mixing it in. It's very simple. You need to make a completely separate options account if that's what you're gonna do. Otherwise, you're setting yourself up for those problems. And then once again, I see biotechs. And again, it's hard to tell. If I can't even tell off it simply, because like I'm telling you guys, notice I just had over a couple hundred emails sent to me right now. Do you notice how easily I could tell? And it has nothing to do with my skill level. I'm just telling you, it's clean, it's simple. Boom, someone's saying long term, I click one picture, all long term. You could notice if there's an option or not. You could notice everything easy. You could notice a thing. So imagine, if it's easy for me to read, imagine what it's going to be like for you to manage. It's going to be easy. That's the whole idea. It should be easy. It should be simple, because as you grow and the numbers grow and the plays grow, it's going to get confusing. When is yield max a good idea? Probably never. It's kind of like saying, when is cocaine a good idea? That's just up to your personal risk. Are you bored? What's that? But I don't think there's any good idea for it. Again, if you want to speculate on opportunities, like we play, like BMNR, I got you guys that, or no, CEP and BMNR, Well, you guys know we were here on day one, and I told you guys what was going to happen with them. I said you were entering monetization phase of crypto, and you could have played them early and flipped them. That's it. But like, again, yield max, if you notice a wave and you want to gamble on it, be my guest. But these aren't supposed to enter your long term at all. I don't think so, especially if you have the knowledge of dividends. You have again, we just spent 30 minutes going over book value, PE, and finding good deals in the market. You know what I'm saying? If you have access to that, you know this stuff, would you ever need a yield max? You don't need them. You could create your own. You could go and buy good quality. I like what Homeboy said with even the SCHD. That's not even like a crazy yield max strategy, but like go and pick it apart, go a la carte and go through it and go find the good names on there. That's what's going to probably be a lot better for you. Adabe, that's a CNBC pump. All right. I'm just clicking through. And then notice, I'm not even, some of these I'll call your guys' names out, but I'm just seeing what I see and then I'm telling y'all out loud. I see one, like Energy Transfer. That's the only thing I see that's sketchy in there. Global Foundries, that one, I don't know. Global Foundries, I don't know if they're on the S&P. Did you pick that up because of value probably? I'd assume. But otherwise, not bad. You have a lot of money in that one too, so don't get out of hand. That's what I'm saying. Some of you guys have a lot of money too, so please listen. You know why? Because it's very easy to put a lot of money in, and like if it works for a little bit, you don't want to develop a bad habit. That's the big thing too, because you don't want. I want you to secure this. I see 50K, I see $500,000. I see 100K, I see millions. I see 10K, 20K, I see 100, 200,000 future value. So you want to make sure we keep growing them and just don't develop these bad habits. So like I'm saying, go with names you know, go with names you use and that you're involved with. That's going to be the best way instead of like deep. If you're going to chase deep value, it better be deep value you know about. That's not bad. Small long term. I like it. So again, if you have a small long term, even if your wife works, that's a good company. I don't think it's bad. But small long term now, like I'm saying, you got $1,000 in a long term, $2,000, you're just starting out. Believe me, in a year or two, if you play your fucking cards right, you're gonna be able to speculate really well. But you can't be trading a lot of money right now. Do you guys get what I'm saying? Choose this pain today. Choose the pain of let these dumbasses gamble away their money. Let everybody gamble and post their plays and flex on each other. Be my guest. But as long as you shouldn't be doing more than $50 a month if you got 500. Again, I don't know how much you're saving. So if you're only saving $100 a month, you're gambling with $10 a month. Like I'm saying, I'm not telling you can't gamble. I'm telling you to have a budget. To have a budget that will make sure it's impossible for you to fail, even if you make the wrong moves. Democrats block Republican health bill at replacing Obamacare. Damn, son. Damn, you got 2 cribs, dog? Let's go, baby. That's what I'm saying, man. And I hope you guys notice it. Because even this little, I didn't plan this. I was just telling homie, I was like, hey, man, you want me to unban you? Send me your long term. Y'all want me to change my behavior? You want me to give you plays? Send me your fucking long term. And all I've noticed is that the gamblers ain't send me a long term, or they'll send me a half-assed one. But then again, a lot of you guys have sent me very good. Again, you guys have gotten nothing less this year. If you have done what we're really here for, our purpose, our mission. I'm stubborn as hell. I'm gonna break some of y'all for good. You are gonna get rich, motherfucker. I'm not gonna let you gamble away your future. We're gonna hold this shit down because, like I'm telling you, there's thousands of people doing very well and just simply following along. And that way, we got to eliminate this idea of I don't know what to do with my money. You have an avenue, and we're gonna make sure you do it the right way. So for real, dog, it's just like this is the thing. Because if y'all follow through with it, man, it's gonna work. And you choose this pain now. Choose the discipline. Choose the small. Choose the fear of missing. You're going to miss some little things here and there, but we're going to guarantee and have a way clearer road down the line and not have to play these games. And again, I think it starts with the separation. You got to separate it. Separate and budget and balance. That's all we got to do. Damn, Oracle's coming out. All right, man, see if the NASDAQ. And that's why, because I want to be able to call out the info and all that, but the moment I realized it was confusing a lot of people, I don't want that to happen. You guys shouldn't get confused off the gambles. You shouldn't let good things become a problem. You shouldn't let having information faster than everybody in the world, that shouldn't hurt you. You see what I'm saying? But if you don't got a budget and you keep using the info to justify these weird long-term plays that you've never used in your life, like, it's gonna hurt. It's gonna hurt, Bubba. Tell them, terrorist. I have the little puppy. He's not a puppy. This motherfucker pay taxes now. And then again, small accounts too. You got to have a separate account, and it should be smaller. So if you're not able to save a lot for the long term, like I'm saying, bro, we got $200 accounts, you know, knocking on the door of 20K after a couple years. I would love for you to have the same. You want to trade, you want to use the info here, listen, but your first big step is going to be separating and making sure you're only using a fraction. If you can't save a lot, you cannot gamble a lot. You can still gamble, you just can't do it a lot. And that's what you're going to have to start doing. Long term after 1 year. I don't like UNG in the long term. You shouldn't have any of that. Again, Vale, that's give or take. Again, Path, I like the company. I use it, but I haven't put that in the long term. So you got a couple non-S&P here's. Do you work in energy? Because you have a couple of these energy. You have UNG and a few other ones. Again, and Vitis, I don't like that. Again, in Vitis, we got at $1 because we had the info and we were early. That's a gamble. You see what I'm saying? So you just have to have a separate account for those. You guys have to know which ones are going to be long-term and not. And that's what I'm saying. If you're not, this year I've made it very obvious. I've only made 5 long-term plays or something like that. We made it very, very clear, no confusion. So if it's not on the YouTube video, if I'm not making a video, we're not showing the long-term, if it's not long-term, I know about it whole for 10 years, that has to go in a separate account. Can we make this commitment today? Big account, small account, just starting out, had it for 5 years, it don't matter. Can we make this commitment? Can this be our altar call today? Please just make sure, because that's what I'm saying. That's how you're not going to get confused. I don't want you confused. I want it very clear so we could have good info and keep doing it. But like I'm saying, that's the stuff that turns me off to it. Do you understand? Because look, it shouldn't be confusing. It shouldn't hurt you. I don't want those things to happen. Yeah, you can make, even on Robinhood, you can make accounts, a separate one. I think it'll get confusing, but even then, you could take this extra step and it's easy to do. Okay. Yeah, it's like Rivian, again, BBAI, and then LAC, and then LAR. Dude, I'm telling that's what I've noticed today. So if you have BBAI, you probably bought LAC, LAR, or WWR for the long term. Tell me I'm wrong. That's crazy. So that's what I've noticed here. So yeah, otherwise your account looks good. That's what I'm saying. You guys just got to don't be so vulnerable to this. You see what I'm saying? Don't be susceptible to that, where you're letting this type of stuff enter your long term. It has to be separate. It really, really does. Yeah, you guys you're letting the 2025 hype plays enter. Again, feel free to hold them as long as you want in another account. That's a gamble account. I have no problem. I think I still have some of those shares because I made them free. They went up hundreds of %. We got our initial investment back. But again, I think I fully sold WWR, I'm pretty sure. So it's like all of these plays, like we were good on them. We hit good. Boom, do your thing. But these cannot be in your long term. Again, uranium, rare earth, I think they should all be in a separate account. Maybe you hold them for a couple years. I'm fine with that. But do you guys get what I'm saying? I am not trying to turn you off from hunting for the future. I'm not trying to say that these opportunities won't be opportunities, but what I am saying is that these aren't gonna. We don't save our money, work hard to save, and then say, yeah, our money's safe here, and then put them on things that we don't know about. Especially when a lot of these people are scammy. All these new companies, they take advantage of the hype too. You get what I'm saying? So that's all. It just has to be another account. If you want to trade uranium, rare earths, again, we've killed it on those this year. We killed them. Again, even quantum, go on the trading fraternity. You'll see all those quantum stocks were pennies, $1. We said this is going to be the next bubble. You could have bought shares. You could have bought a leap if you wanted, done whatever the hell you wanted. But that's not going in the long term. That's what we got to really figure out right here. And that's what I'm saying. That's how we're going to make sure this is a very safe environment, but fuck even safe, effective. That's how it's going to really grow for you and make sure you don't get clapped. That's what we want, man. You got 2. Let's see. PG. I like it. Homeboy with 2. You got the Schwab dividend account too. Minvu, but I'm not, honestly, with everything else you have, I don't think it's that bad. So that's a good one, Jack. I don't know if you've been banned. If you want to get unbanned, send me your channel, because that's a good one. That's what I'm saying. And if I banned you and y'all have long term and y'all have, you could show me that this environment helps you and doesn't hurt you, I would accept my forgiveness and forgive me for banning you, and I would love to unban you. But I'm not, you know what I'm saying? If this environment has hurt you or you're hurting others, I'm not down. I don't think it's a good idea. Is MSGS, that Madison Square Garden? Yeah, that's not bad. I like it, Cameron. Are you crying? You got Wendy's. So Wendy's, I think that's borderline. I don't think Wendy's is bad. Yeah. I just think, what's it called? I think a lot of people get, and then like Teladoc, do you use it? But I think Wendy's is like, it's falling for a lot of people are like, oh, I want this. You know what I'm saying? Like everyone like, yeah. So even then, if it's small, just put it in another account. I'm not saying that. You just got to be like, is it going to be around in 10 years? And am I going to really be aware of that? So yeah, you use Teladoc. That's it. If you use it and got that experience, I could justify it a little bit, and just make sure you guys stay. Again, that's the other lesson we talked about recently. Just leaning heavily towards S&P 500. Because if it's on the S&P, that's like a minimum level of quality you could at least make sure you have. Okay, buddy. Go ahead. I had Palantir in another non-account. We just got it at a really great price, and then I ended up selling it for taxes, and then that backfired. But I know a lot of chads got it there. But like I'm saying, if you guys want to trade them, even if you think it's going to be the next fucking Palantir, you should put it in another account. That's what I'm saying. You should I would have put my gambling budget to those types of plays, and my long-term budget is going to go to stuff that guaranteed is going to be around. And, or at least has a higher, don't expose yourself to that risk where your savings, your long-term, your future value and what you could turn it into. I don't want to tie most of my money to a chance when we could actually use data, information, and value and make sure that at minimum our money's coming back to us. JRVR. Yeah, you got a couple of the hype plays in there. It's not bad. Your account's small. Just stick to quality. You're going to be good. That's what I'm saying. Just don't fall for the other shit. You just got to separate them all. Like, I don't know, like Ryan's Specialty. I don't know what that is. I know Red Rock. Is that Red Rock in Vegas? And then here's the other one. This is cool. So, Vanguard Treasury ETFs, TLT, any bond ETF, I would not put in your long term. Why? You should just buy a fucking bond. And if you're young, you don't fucking need a bond, especially now with where the rates have been. So that is something I would avoid. That's not a real good long term investment. I know you want to like a TLT or some shit, but that's just not, that's gamble on it, but that's not going to be long term. More red days than green days. Who said keep pushing? You did. It's good. I don't know when you bought these. I see a Fubo. I see Newell. Newell's not too bad, but again, some of these are like gutter ones. And then I see Bed Bath and Beyond. But is that overstock? So it's not too bad. And then, damn. What the fuck is Sirius at? Yeah, it's not bad. Yeah, I like Red Rock. I don't like the stock. I like the hotel. That one's not bad. You sent me your Roth. You want me to unban you. Do you have a non-Roth? That's the real question. Do you have a non-Roth? Otherwise, because again, the question I banned you for was the leaps. So like I'm saying, if all you have here is this Vanguard, you got a decent amount of Apple, and then you have the dividend stuff. But it's like, you got to think about that. Like, right? I don't want you gambling that crazy. Like, you should be focused, prioritize. We need to, you work for Ryan. All right, well, there you go. So yeah, I'm down to unban you. Can you send me do you have another account that's not a Roth? Do you have, just like you would have a Robinhood for trading, do you have another account that is, just like another account for long term, just like we have? So I see Fannie and Freddie. I'm not really the biggest fan of that in the long term. I think gamble. Everything else is solid though. On that one, you got a really nice one actually. Y'all, some of y'all did see. You guys did pick up the UPSs and Targets though. Even if I didn't, I think you guys were listening. And y'all got to make a move on your own, which, again, looking back, they look beautiful. But yeah, Freddie and Fannie, gamble. I don't think that could hit long term just yet. Just remember, that's like a failed company practically. Eduardo, yours is good. Just again, depending on, now I see a lot of fractionals. So if you have a lot of fractionals in there, like I'm saying, you got to really think about what this says about, how much you should be trading with. And that's something that I really want to make sure is in place again next year. And this is why I'm saying, y'all hear plays and info. We got to make sure you're not falling for that shit. So you want to gamble, you want to play short term, that's fine. It has to be much smaller. So if you can't put a lot to the long term, by default, you shouldn't be putting a lot in the gambling. And then once you build them up, think about it. You build up the long term, it's going to build up your opportunity to speculate too. But it all has to be separate. All right. Oh, you got PG. All right, that's good. Because some of you, PG is going to kind of act like an anchor. I see some of you just started within the last year or two. I'm glad you got some good intel as well. All you got to do now, again, is make sure you control the gambling side of it. And then at the same time, you don't want to have too much of these value plays where if you get a value, like we said, like a Procter & Gamble, a Walmart, we want some of the higher qualities. What's so bad about Roth? I have an IRA and figure to be fine. Nothing's wrong with a Roth. A Roth is actually better. It gives you a lot better tax benefits. But like I'm saying, one thing leads to another. I do think that some people only do the Roth, and they're not really making a decision to save their 10%, if that makes any sense. And they're focusing primarily on the trading. So I know it's going to happen. Eventually the other shit's going to be at risk, or in a weird way, the only reason it hasn't been touched is because you can't. So a Roth isn't bad, but I'm saying, especially in that other situation, if I'm banning you for talking about leaps, right? And that's where your focus is at, and all you have is a retirement account, there's a really big gap there in terms of what we're focusing on and where you're at. I want to see if you have the other one, because again, it won't hurt you to have. But having a Roth isn't a bad thing. I hope you guys don't think that. But remember, save 10% of your money. Find a way to keep it, and then try to apply it to, again, good quality stuff, not necessarily just all these ETFs. Because think about it. Let me put it this way. If all you're doing is these like ETFs in a Roth, what does that imply? That implies something about your commitment. Not to here, but to investing. It implies that you don't really have the time to manage, right? That's why, like I said earlier, if you really don't have the time, ETF would make sense. Again, if you really don't have the time, you're working, 60 hours a week, you have a family, you're doing all these things, yeah, you don't have the time. Like, it makes sense where the Roth and all those things are coming into play. But if you have the info, you are even to the point where you're like, I want to trade. How do you have time to trade, but you don't have time to manage a portfolio? That will work. See what I'm saying? That's why you have it, because you can't touch it. So I encourage you to take it to the next level. I think you could do both. And then if you don't have time to manage, you don't have time to trade. If you don't have time to do anything but buy an ETF, I think you're going to be focusing on the wrong area by trying to get options. Fannie Mae is leaving Cali and reestablishing in Birmingham. Those mineral plays are going up again. Let's see. I see a biotech. Yeah, so just watch out for the little biotechs. I see some of y'all rebuild. Y'all told me the story of the ups and downs. Oh yeah, and then if you have like again, I think that's another big thing today, is that if you have like, you made some mistakes, you're like, I started and then I veered into this and then fucked up, and I said I'm coming back and then doing it the right way, raising deposits, all that's good. Just make another account, just in case anything, if it starts to get a little crazier and you have some of the old stuff, like old trade, you either get rid of all the old dead trade shit or you just make a whole account. Because again, if you didn't, like the other guy said too, if you guys saw if you saw what we did with the farm this year, you could save those losses for some of that tax break. So it's not a bad thing, but then I wouldn't like keep adding to it, and I wouldn't like make it like go crazy after that, because then it's just going to get complex, and then you could have another account, separate it, call it a day. So not bad. And then again, depending on the size of it, so if you're saving, sadly, it's like if you're only putting in $100-200 a month, your gambling budget should be a lot lower. That's just the sad reality. Why? Because if anything goes wrong, any mismanagement, all of that, you'll be good to go. Don't add if it has a lot of shit in it. So if you have like a bunch of old shit and you're even mixing with options, I would make a new one. Otherwise, if it's only like 1 or 2 old ones and it's just gonna sit there, then you could keep going with it. But if there's too much mess, too much drama, too much old, and it's in the way, just go make a brand new one. GMAP. Why is Clorox or Colgate? I wanna be like Mike. Yeah, okay, I'll unban. Do you know why I banned you though, Mike? So I'll unban you, your long-term shows, but don't flex plays, don't post plays, and don't let that, again, as we're seeing, you know, people will get confused. Even if I give them some other ones, man. Oh, yeah. I want to be long-term. I'm not unbanning you, Malik. Why? Because your long-term has BBAI, MSTR at the high, BMNR, AUKLO, and then cap it off with a biotech that does not have a pipeline yet. That's what I'm saying. It's not, it just doesn't hit, bro. You know, I don't think it'll hurt you more than help. Again, that's why I think some of y'all too, again, like a IBIT ETF, I'm not down with. Just buy real Bitcoin. You have a penny stock in your long term? I don't even know what Servaru is. And then Qubit's not a fan. Other than that, and then TQQ, you shouldn't have TQQ in there. That's literally not a long-term play. I see some rebuilds. I like it. Flagstar Bank. Do you use them? And then again, another biotech. Let's see. Yep, you have another OTC. Oh, you don't have WWR though. So not bad. But then UNG, like I'm saying, I don't know if I would put those in the long term. A lot of dividend ETFs. Oh, and then MSTZ. So this, you didn't have that, and then SoundHound. So again, I would just keep those in another one, you guys. So like I'm saying, that was the first time a biotech didn't have minerals, but he had some of the AI ones. Yeah, I mean, believe me, the flexing is one thing, but my real thing, I'm like genuinely asking some of y'all, like, how did you listen for so long, and like, why aren't we really building the long term the right way? That's what I'm curious about. But then also for like efficacy, if I'm not having that impact on you and it's leading you to get, you know, a bunch of hype plays and viewing it as a long term, when you know that's not how we view it, is this really effective for you? You know, I think you would be better off finding it out on your own, playing around, and then returning to the truth rather than, you know, thinking or saying, yeah, I'm doing it this way, but then not really doing it. Does that make sense? That's the real, like, question mark about it. Because then that means you could spend a lot of time in here, but then something's being blended and mixed. And then but then what's having the pull? Like, you're walking away with the long term with maybe one play that we would have been down with. But then the rest, like, again, you're exposing your own money on a long-term scale to some opportunities that are just scammy, if anything. And then it's just like I'm saying, you just got to separate it. And I don't want to keep exposing some of y'all this stuff and make it easy for you to get confused and then confuse yourself, because we can't have that happen. I mean, it's gonna happen, but like I'm saying, I'm not gonna make that easy. I want the real efficacy of it all. And then 2, you shouldn't gamble as much then if that's the case. And then we need to make sure you got the good balance. Someone sent me one. So like TMC and then like Joby, that's probably the only thing where you're I would put those into another gamble account if you wanted to keep doing that. Or as you build your long term, I would stay away from those types of plays essentially. Or then what else? You have another one? Yeah. Golf company? I've never heard of Newton Golf. Do you use them? If you use them, maybe. You sold. I don't care if you sell them, brother. Because now look, you just sent me. I already knew this too. So why does your long term have Amazon calls? Why does your long term have Doge? What the fuck is bonk? So you see what I'm saying? I'm not mad at y'all. I'm really not, man. But that's why I'm saying this. I'm not treating you. I'm trying to help you. Do you see why? So now you think I'm treating you like shit. Forgive me. I apologize. I'm done. This is why I banned you. You're not getting banned, brother. Like I'm saying, I'm not trying to make anybody feel like shit. I'm trying to teach people. I feel like you're trolling at this point. Like I'm saying, the people who are not listening, and again, this is only hurting you. I mean, when it's all said and done, you guys make a lot of noise about it. So unfortunately, brother, no, I'm trying to help you. So I'm not, but that's what I'm saying. You're gonna start hurting me and trying to help you. I can't do anything, man. So don't worry, just go wherever you learned bonk from, wherever you learned, hold Dogecoin in the long term and the other shit. Just go there, bro. Just deal with that and you'll figure it out. I see another one, only one I wouldn't like, Lucid. I don't know if you bought that a while ago. Again, these are the ones Vanny, I see. So you guys could blame me on that one. But these shouldn't have been in your long term. Other than that, I don't know. This account just looks like you started it a while ago. I'd assume. You did good. Well, that's what I'm saying. The scary... I'm not trying to tell y'all to sell anything. You get what I'm saying? Just moving forward, you either go make a separate account if you want to keep playing those types of plays. Do not make this same mistake of putting all of this in the same account, where clearly if I'm trying to help somebody with that, you're going to think I'm doing... No, just put it separately with a much separate and lower budget. Do whatever you want. Right? But that's not a long term if you put it all in the same one. That's just not going to work. So that's what I'd stay away from. If you want to stay on the right track, I would be putting high quality, long term, 10 years minimum I know about, all in one account. And then any of the gambles much lower, then you put it into a separate one and call it a day. Like I was saying, some of you got some other ones. Two mistakes. You put sound. At least you know them. Look at that. So if you could email me and you know your mistake, God bless you. That's what I'm talking about. Yeah, so he put sound in the long term and knew it. And then a covered call. But again, the covered call just all depends on the price. Like I'm saying, you just got to really do the math and make it make sense. But then, yeah, that's it. Sound. I put it in a gamble account. Call it a day. You don't have to throw it in there. I see it long term. You got an option in there. You only got one, but that's the only other problem. I don't know what PAAS is. Everything else looks good though. A couple of the dividend ones. K-Web. But then again, I remember we talked about K-Web with all the Baba shit. Because remember, we were saying at some point when like Baba and Baidu, I do remember saying like K-Web did look really attractive. You could have gone with what's it called? Oh, a silver miner? Yeah, I hate those. That's what I'm saying. I think those, just separate them. You want to gamble on the commodity, just put it in a separate account. Other than that, it's chill. No problems here. That's good. I see some of y'all picked up some of the main ones. It looks like you guys are just starting out. I'm glad you got Pepsi. That's going to be a good anchor for you. Some of you picking then like a Clorox too. I'm down with that. And then again, depending if you're just restarting, setting it up, and you're building this year, you should be staying away from these gambles. Or again, $3,000, $4,000, $5,000 account. If you're saving $200, $300 a month, unfortunately, for a little bit, your gambling budget, your trading budget should be non-existent, or it should be $20, $50 a month. And that way, again, you pay that price now. It's going to make sure these accounts do the doubling and tripling we need. And then watch, you're going to learn a lot of stuff in that process too. I want to be long term. Down. What broker is this? Oh, Bank of America. Yeah, I see another gold miner. So again, you killed it on that one. You did good. I just don't like those for the long term. And then you got energy too. So that's just a personal decision, I think, when it comes down to it. Otherwise, it's not that bad. You just got to balance. Make sure you don't get healthcare. You got a lot of healthcare in there. But yeah, I like it. That's it. Just some, not as many red flags as if any. That's all. Just plays I could probably disagree, like 1-2 plays I could probably disagree with, the miner and energy. That's it. You got some crazy, like the hype plays, we bought it low. You've restarted that one. That's it. So on the restarts, because there's a lot of value, you guys just got to start thinking a high quality anchor down the line, right? Like I think Pepsi would probably, some of you grab Pepsi, that's probably going to be your anchor. Try to go higher quality one day, but just keep that in mind. You get what I'm saying? So, because again, a lot of these are like the deep value plays, like a Chipotle, a Dow, Nike even. These names were down a lot, and they've been kind of struggling. They're still going to be around for 10 years, but we want, Pepsi, like I'm saying, Pepsi's a pretty good example. They're going through their own struggle, but like pre this year, Pepsi, that was a anchor stock. That's why we kept making noise about it, because of how, when it got cheap, like, you know what I'm saying? Like, let's pull this out even more. Like, this is a fucking blue chip. You get what I'm saying? Even then, looking at it now, it's still good. That's your anchor. And then you still have some with a little bit more momentum. But that's where you got, if you're only buying the damn sweet greens and all these other plays and like deep Fiserv even, you can't be buying sweet green, Fiserv, and all these other values without an anchor. Are you guys following? Because you don't want any dog shit. No, I wouldn't. No, TAP is not an anchor. TAP is a deep value play, but TAP is tiny. You get what I'm saying? TAP is like a couple $1 billion, right? Like Pepsi is a fucking behemoth, right? We're talking $200 billion company. That's a blue chip. Pepsi was popping 20 years ago. It was popping 5 years ago. It's going to be popping in 10 years, right? That's what I mean by an anchor. That's like a Walmart, a Procter & Gamble. These are fucking high quality names that are not going anywhere. So that's why I'm glad a lot of you got Pepsi. Even UPS. If UPS wasn't struggling, that's a name too that's not really going anywhere, and that's a $100 billion company as well. All right, dude, there's so many. I've gotten through a lot of them, but all right, guys, we're gonna have to take a break. You know why? It's time for Philo. So you just sent me someone sent me you just sent me one with only options in it, bro. What do you want me to tell you? What are all of these? So yeah, and keep it in mind too. That's what I'm saying. You ever hear these flips and the random plays intraday? Like, this is where you guys got to keep in mind, like, just these aren't long terms. Anything short term, that's why if it's a long term, I made a video. We'll make it very clear. If it's not high quality, if it's not, I know I'm gonna hold it in 10, all of that, then you just gotta move it on over to a separate account and don't let it invade your account now. Well, I wouldn't break the rules to clean it up though. That's why, because in a weird way, even if some of them are down, especially if you have a lot more money, that's going to be your down payment. So you could still hold it and strategically sell it to get the tax benefit. But like moving forward, I would have a separate account for separate dog shit or anything not like long-term quality, and then you could add to another account with high quality, or keep adding to that one if you really wanted to. But sometimes it's just really about fixing and stopping the adding of, the mixing of the gambles and the shorter term and the, lack of quality with the high quality. But I do like it. I like the homie who brought it up, because like he recognized it. He had it in his portfolio. There wasn't all good stuff. But he's saying, I'm going to sell it when I buy a house. I like that strategy. I like that he's thinking. It's pushing you to a home. It's thinking about the future, and it's doing it in a way that is like, you're thinking real good about it. So I'm a big fan. I'm a big fan. I mean, you don't need that many anchors, but like at least one. And then two, like if some people, when they start rebuilding the portfolio or starting recently and they're only going for value, that's not bad, but eventually you're going to need a high quality name. You're not going to survive all of this with only these deep value ones. And then that's why just keep your eyes out for them. Because you got to think about it. I'm buying these because we bought some anchors. We got Baba's, and that was risky. But then again, that's a $200 billion company, and we got some of these other tech ones already. So just keep your eyes out for those. That anytime. That's why, like when we go through the S&P list, when we start seeing things go down, like if you have like Procter & Gamble, that should be attracting some of you in a weird way. It could still go lower, but you need something in your portfolio that's going to be stronger in that sense. Or if they ever flush, that should be your priority, is to get the higher quality blue chip. And especially if you already have a lot of deep value that's really down and lacking that momentum. There's still good names. Like again, TAP is a great name. I still love it, but we're not going to rely on that one only. And then if like Procter & Gamble just went down to $100, I'm going all in on Procter & Gamble rather than building any sort of TAP or anything of that nature. Google is building an experimental new browser, and then Pfizer's flashing. My anchors, I have quite a few at this point. Like JP Morgan, that's a solid anchor. Meta, Netflix, though, again, Alibaba. You know, we have many mega caps. We have several, actually. So that's why I've been, you know, getting some of these. But then any moment we could get some of those, like the value, I'm picking them up. But I do prefer higher cap names with good, just big market cap, big value, big cash flow. Those are attractive. But then again, as those are starting to hit the roof now, you know, some of these names are up a couple 100%. That's why we've been focusing on a lot of these deeper value plays that have, you know, they're still S&P 500, they're still there. And, you know, that's why we're doing it. Tell me why I never wanna hear you say I sold my long term today. All right, damn, Molina's at 170? Bruh, that was at 140 that after your boy Burry. Habibi. Well, Chad, time to go to Philo. We just spent a couple hours talking long term, bro. That was a good time. I hope you enjoyed it. I hope you're blessed. I'm very, very impressed. You know, I think I think you guys get it. Like I'm saying, we had to make some changes this year, and I think you know, if you've been on the plan, and nothing really changed. But you know, I do want to make sure that y'all get influenced in the right way, and hopefully influenced into thinking and getting good picks, man. You know what I'm saying? Just getting good picks above all else. So let's make the most of it, and God bless you, and God bless America. Stick around if you want to be there, or click on the link. It's free to join. But yeah, we're gonna talk about some Jesus. Peace. Oh wait, Trump sanctions Maduro's nephews, 6 ships carrying oil.